Mic check, check one. Check one. First bit of resistance right now. You are in calls.
Saying he wants to create a process.
We're not going to wait here for that. We're going to go straight into it. So just notice here if you are on...
How does he plan to do that?
And that's the thing, and he's been very clear about
if you
that, right?
are on calls from yesterday,
that is not what you see.
I exited right in here
he wants to challenge that
on 0 dates, but
trying to foster this culture.
You've got this one right here. It's pretty close here to this R2.
In front, if you're
450.87. If you are on 0 dates and you're directionally, if you're holding calls directionally from yesterday into today, if you're buying that close yesterday, well, just remember the mechanics of not what are now 0 dates and what they.
One of them could become the CEO to then be able to say that the two losing candidates, the rejected will not feel hurt and will not want to jump ship right away.
What they actually mean, right? So just notice we did touch 448 on the opening bell here. We are close to this R2, and then over here we have the target that we had from yesterday for today. Today and tomorrow, minimum of 452. We also have 455, I believe, for Friday. We should get vol crush on CPI data. Yesterday we talked about the downside moves in the marketplace. And
according to a statement, Biden says the inflation data shows the U.S. economy remains strong.
Hang tight here. I've got financial juice today. Feels like being really high. So just off of this, open a few things for you to understand is you're going to get vol crush on CPI data, and you'll likely get a little bit of a bump from the expectations for tomorrow. Tomorrow we have on Friday PPI, core PPI, PPI year over year, core PPI year over year, and then of course consumer sentiment. Preliminary, which I think is actually going to be good. Of course, or consumer sentiment should tick up slightly. And any of the reads on gas being higher shouldn't come out just yet. So there should be at least some vol crush off of Friday's anticipated news. Now, saying that, we still have not had a legitimate retest of hourly trigger. We had the retest down below here. This is good for the squeeze above. So we tagged 480. I think in the Discord this morning I told him expect a tag of 480, and then I expected us to go up on the bell as well. So that was pre-market before the open. We did tag that 480. We did come up here, and we're trading this R2 at 450.87. There is a small gap to the downside, and I mean tiny, like super tiny down here on the pivot. Can we come back there? Possible. 446.64. It's possible we can get down here. Velocity is topping-ish right now. But that vol crush can overrun that. We know that, right? We could have some sustained move to the upside. Now, with that said, let's take a look really quick. We talked about this yesterday in stream. The setup into the close yesterday, there was twofold. Someone wanted to pin the market the last half an hour. I was in the options chain yesterday on 0 dates, and someone was slamming 800,000 calls for pennies. I believe 448. And so, so much money. It's a good morning, by the way. Good morning to you if you made money on that open. If you traded any of this, here or even here, there's a lot of money here. Some good money this morning. Thanks for joining us, by the way. So there's two things that happened. In the close yesterday, someone, a dealer or an entity of some kind, was buying like 2-cent calls, like 7 cents and then down to like 2 cents and 1 cent. They're just slamming them. And so that was pitting the market into the close. We ended up rolling down into the bell. But there was one other argument that was made into that bell yesterday, and that was we're coming up now to 450.87. And someone in the chat yesterday said to me, "No, you worry about the report tomorrow." And so I had to draw for them. Who actually had to worry, right? It's not the bulls. The setup there is for bears. They needed a very hot CPI report. Can't trade down into the close of like that severely over the past few weeks. Can't trade Apple down to 174 and then think that you're going to get a mild CPI report and expect Apple to drop another, 50 points or 25 points or 10 points or 5 points. It's not going to happen. You just had a pullback on Apple to 177. It's close enough. Maybe a pullback to 174, another $3 or something. But it's so close down there that you're seeing a rotation in the market. You're not seeing distribution. How you know that is because the S&P 500 is holding up. You're seeing some of the main drivers of the market having decent pullbacks. Apple specifically had a correction. The S&P did not. And you're seeing that money enter other sectors in the stock market, holding up the S&P 500. That includes, believe it or not, oil and gas. They're part of the S&P 500. Meanwhile, you see Apple come down to 177 bucks. We discussed multitude of times that 174 is a great buy, dip buy for bulls. Bulls out there want to buy Apple at 174. At 177, it's a no-brainer. It's a no fucking brainer. You buy it at 174 bucks, 177. It doesn't even matter if it goes down to 174 because it's not done going up. Summer is not over, and we are going up. So there is some corrective action going on in the stock market, but not the S&P 500. As a matter of fact, resilience of the S&P 500 is real, right? It's a real thing. It's always real, always has been. Now, S&P might not outperform like tech stock might outperform, but on times like this, the S&P 500 is holding up quite nicely, isn't it? You should pay attention and take note of that as well, that the S&P 500 does that. It does hold up, have more resilience than than individual tickers. The volatility associated with individual tickers. We have a new high. Look at that right here. New high just now. We also stated that we always put in our targets, right? There's one right there. Here's this one from yesterday. And this is our next target above, 452.21. Now, I'm still in spreads. I did get out of anything that was directionally challenged. I'm a fan of taking the money and running, realizing profit. I was loading the boat down here yesterday. I did take some of the money off yesterday, some of my exposure, but I did leave some on, and I made outstanding money on this trade today. So I took it right there. I'm plenty of cash for me. The FOMO's kicking in. The event ball is cooling off. We're burning up right now, trying to blast even higher. We're going to trade next. I think I gave this target inside of Discord this morning. Price target of 452.21, and I also gave this target yesterday before the bell. Now trading 451.22 to that R3 above. We know where this purple lines mean, right? This is where the sellers are. We are trading above all the way back right now to August 7th. And we have this Valhalla moment up here, this failure above. This is also R3, target of 452.59. And then this 452.90 up here above. Look at that beautiful squeeze. All that noise and drama gone, right? Look at that. 1, 2, 3, 4, 5. Erased. Gone, 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 baby. Gone, gone, gone. Giant gap up here. This is a gap. You've got the R3 target above up here, PT 452.21. I want you to know that there's going to be vol up in here. Sellers right here, they're going to want to sell down on you again right here. You've got one more day. Grind up here and start to knock all this stuff back out again. Do I think we get up there? Oh, boy. Now, let's talk about something here. This hourly trigger. We talk about this. I talk about it in stream every day. And we have not had a successful retest of it. We are looking for that still, even with this squeeze. No matter where we go to the upside, you want to see it come back and get a successful retest for the big power move to the upside. Just right now, we were talking, not we, definitely not we, but we were talking about a market crash in the chat just a few, like yesterday, day before. Ready? Overriding conversation in the chat every day. Market crash, market crash, market crash, market crash, market crash, market crash, market crash. You know what Captain was saying up here? Don't worry if you wake up one day and we start correcting. It's not over, though. We're not done here. Don't panic, but guess what turned in here? Guess what overrode the chat? Market crash talk. Okay. Trading 451.48 right now. Lows not seen since August 1st on Thursday, August 10th.
And I think the Fed is kind of enamored with this soft landing view. They're almost wish casting this.
Everybody here this morning? Chat looks a little light right now. Looks like half the chat's missing this morning. I show up every day. Show up when it's green, show up when it's red. Where's everybody this morning? You guys going to wake everybody up this morning, find out if they're okay? Yes. You guys on call spreads right now, too? Call spreads looking pretty fucking good right now. You guys want to buy calls here? Didn't like them down here, did you? Didn't like them down here. Didn't like buying them right here. Didn't like DACA and right there. Want to buy them right here, though, right?
I get that, though.
Get out and do your part.
Yeah. But no, don't you think it's better if they just broaden the hours to basically like all day?
How the turntables turn.
There's a place I used to go to on the
How the
shore.
turntables turn.
Would be in there at 7 a.m.
Oh yeah, well yeah, makes sense to me. Yeah, they go out at 2 or 3 o'clock in the morning. They need it. Catch the fish. Yeah, those are some hardy souls out there. As is John Tucker. Thank you so much for that, John. Matt Miller,
Book map. What are you doing, baby?
Here in the Bloomberg Interactive Broker Studio. We're also streaming live on.
I gotta have a talk with you guys though. Now,
Bloomberg Global. So Matt,
I have to leave you today.
inline inflation print markets is like an S&P up 1.3.
I have to leave you today because the website is launching,
Hang around it.
and I'm gonna leave the stream on.
I thought Neil Dutta's take was really interesting on surveillance. this
But I
week.
gotta leave like this. I'm gonna leave the stream on, and I'll stop back in at signposts and stuff.
We're gonna have above
But I have a
trend
ton of.
growth.
I'm getting yelled at right now. I've got people in the background yelling at me. I got like the smart people
For GDP. But he
yelling at me. They're yelling at me yesterday. They were like, "No, dude." They're like, "We're at that point where we need you." I'm like, "Okay."
continue to be cautious of it.
So,
WTI
just so you can see, there's some supply up here.
$8 a barrel right there for WTI crude gas.
Tagged it right there. Got a little bit more push above here.
Billy Lipschultz, he
You got some secret levels somewhere maybe up there. You can see it all up there, right? Oh, what's that up there?
Chance for a rate hike in September. The big thing that stands out to me though, when you look at that warp function,
45.82. Woo!
pricing in
Woohoo!
cuts by the end of July next year, so could be interesting to keep an eye on, and that is probably why you're seeing.
How's that Disney trade doing?
Tech really leading the
I'm
way.
glad I got talked out of that trade. Glad I took it early. Yeah, at least I got paid. Should have bought it for my kids back down at 85 though and just done it.
Come back at its e-commerce core unit, Taobao, and Tmall.
And just held it, or the leaps that I was originally considering.
Alibaba making things happen.
So much
Another
doom.
notably, outperformer is Capri Holdings.
451's trading $1.24.
Agreeing to be bought by Coach Parent Tapestry.
Those are trading like, I think I had those for like, I had like 451s, 452s, 455s. 451s were like fucking, they were garbage yesterday. That bell close, I'm like on that bottom tick going, buy, 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 buying Friday shit. And like, it was like buying. At one point yesterday in that close, I kid you not. I kid you not. At one point yesterday in that close, right? That bottom tick down below, right? I was on the 1 minute tick down there. I was like slamming buys, and it was just like, now I want some more. Now I want some more. And then I was like, if it rolls over one more time into the actual close, I'm like, just do it so I can just add even more right here.
Like, what's the whole deal with Tapestry and well, Kriti Gupta's going to join us later. She's
Oh,
very good
boy.
on this, and she says basically consolidation is a thing.
And I will say Tapestry.
What else we got here? Main screen.
And I would say I
Okay.
would afford Versace, and Versace is
Heat map.
in the luxury category. I don't think I've ever even seen
Risk on day today, all green everywhere. Ocean of green. This is the daily performance, 4-hour performance. It's the 1-hour performance right here. Lily down this morning. So pretty good. We're going to talk about somebody. We'll talk about CPI and PPI, when it's going to matter, when it's really going to matter. Now, I want you guys to understand something. So these conversations that we have about wages, now we've been talking about this and trying to layer it over the past week or two. And we're going to actually roll that into inflation that comes back to rear its ugly head down the road. And what that's going to mean, the bounce in inflation, that sort of stuff, how that plays out in the longer term.
$400 a month was the average.
SPY,
Doesn't that seem like out of reach for most people?
with a high of 41.70.
Big investment if I'm going into the office.
Pretty close up here, right, to that R3.
What's the point? I don't.
I mean, I get that there are people who just absolutely
Don't lose your senses,
Right, who
just like
absolutely
usual.
living in Manhattan or looking at Bailey.
As long as price stays above the 6 EMA or defends this 450.76. Same usual targets. No reason to sell longs here if you're long the market right now. I'm not selling. I have a pretty substantial position here on spreads. So there's no reason to sell long unless you're like directionally challenger in 0 dates or something. You want to take the money and run. You're on 1 dates yesterday, now 0 dates today. I understand that. I took a bunch of money off the table. I made great money.
Dollar is in the red, just down around 0.4%.
You've got same things as usual, right? Keep trading it up until it fails. It'll come back down, test the 27 EMA, and you got another test down below on the 449.34. If you want that one. Nice, beautiful day today. Coming up to trade R3. Remember what I say about squeezes, big clusters like this? We slam it all the way up, and we come right back down. We will return at some point to the scene, not the scene of the crime, but the hourly trigger. We will test this at some point. 5-minute basis right now. We have a nice big extension here. 15 minutes. Giant bull. We've got a big bull cross on a 15-minute, plus we've got a giant cluster down here, daily HT. 1.5 as well. On the hourly, I want you to see this here. I want you specifically to pay attention to this, okay? If you're looking for a trend change of trend, you're at home right now. If you're at home right now, we're going to switch over to a full screen chart. I want you to see this, okay? We'll just do it on SPX right here. We'll come right back and show it on SPY, but I want to keep it clean for you. So I just want you to see the SPX on a 1-hour chart. So I just want you to see this here, okay, what's shaping up. This is SPX on an hourly. 27 EMA. Flattening of the 129 EMA. Price above the 129 EMA. Follow my cursor here. You're watching the turning up of the 27 EMA right here. Watch that right there. You're going to see this red one come across right here. You're going to be looking for either a pullback and consolidation here for that trade higher to close that gap. You know what I'm saying? Or you end up seeing just this push where we close this gap, come back down and retest this right here, okay? But we do have the signs. So I want you to remember this if you're a bear, okay? I don't care about the bulls. They're always late. They are always buying tops. Bear. There is an unconfirmed week to 3-week trend change shaping up right now. I want you to see that, okay? 1 to 3 week trend change. I want you to see it there, okay? Right now, it's only a 15-minute, which is 1 to 3 days, right? Maybe 5. See it right there. Here's the 15-minute. This is a weekly, right? Needs to confirm the 15-minute to the downside right here. That target is 450.045. Do you see that? Bulls want to see that confirmation for continuation for about 3 days, not 1. It's like 5 minutes, like 1 to 3 days. 15-minute is like 3 to 5. 1 hour chart is 1 week to 3 weeks. So just so you're aware of this, if you're a bear, a seller out there, that there is a reversal in progress right now. So if you are short, you had a chance at 448 to get out. Put that on Discord this morning. Your next chance to get out is likely going to be on SPX 45.0495. You're looking for a second chance to exit. Short, you may have one more chance. We're going to show this on SPY right now. I know the chart, SPY chart's kind of messy, but at least on a 15-minute, You may get one more chance back here. You can see here in the 15-minute. You might get one more chance at.
You have any succession
You
advice for
might
Bob?
get one more chance on SPY, but I doubt it. On SPY, at least. If it does roll back down here, you're going to hope for maybe 449.05, maybe.
haven't seen the end of succession. So
Check it out. You're going to see a reversal right here to the upside. You see it?
it's in
Want you to see that right there?
Disney there.
Wait,
like,
maybe it may show up better. Let me
exposed
just make
to
this
what
clear
this
for you
story
so you
that
can at
we're
least
seeing
see it.
with the writers and the actors. You're so involved with
If you're sell side.
you know, the advertising side of the business.
So here's the red line right here.
The business. What's your take on these strikes?
There's
that
the
have
white
played
line
out
right as a
tonight?
1-hour chart, okay?
Really entrenched.
You'll be lucky if you get. Damn it. Hold on here. You haven't exited short yet. You're going to be given. Damn it, dude. Like, seriously. 1-hour trend reversal. You'll be lucky if you get a pullback down here. All the way down to here. It's about 449.05 or so. Expectation would be that we only bounce right here. That's 450.21. Then we begin to get green bars for a confirmed trend change. This hourly trigger will come up as well. That hourly trigger will wind up right here.
Of their operating income.
And you would see, you know, a bounce down here. Or a bounce even up here. And then just some continuation, consolidation, and continuation to an actual trend reversal. And this would actually take us back to a return. A return to this year's run all-time highs again. Probably a failure right before it, but. So the correction around the market on individual tickers looks like it's complete right now. Steps are being taken right now for a major trend reversal in the market here. Still unconfirmed on the 15 and 1 hour, but it's there, just so you know. So if you're a bear, you've been warned. Okay?
Hey, Mark, give us a sense of kind
So you get some targets down here somewhere in this vicinity.
day-to-day basis. I can't imagine
We're going to find out if the buyers are still here, right?
the economic environment is kind of uncertain here. What are you seeing?
So 1 minute chart right here. So basically you want to be looking for something down here. At some point, today, tomorrow, I don't care. It's today, if it's Friday, I don't care where it is. But somewhere down in here, you're going to be looking, just checking to make sure that all of this is real down here. If you're a bull and you've missed out on any of this, hopefully you get an opportunity to trade all this. You can pause this program right now, go back and look at this stuff, draw your own little support lines, and see if you can chase it or catch a ride on the way up. As of right now, the move is still the upside. So there's no, like, we haven't pulled, this isn't a pullback yet, just so you know. Like right here. We're just checking the 5 minute, the 1 minute, excuse me. So we're not done going up. We're not done going up. They're still buying a dip. Next target above, 452.21. But there is a trend reversal building in the background on higher time frames. Okay, I want you to realize that. Oh boy, baby!
Electric looks awesome. Yes, I mean
Return to the scene of the crime.
because the Escalade has always had a stick.
Turn to the scene of the crime.
For kind of, I guess, wealthy, suburban moms, or also kind of like rappers and stuff. It's been seen as
Okay, I gotta monetize this video. I haven't monetized anything.
product. I like excessive things, and to me, it's a huge competitor to Range Rover. Yeah, it's interesting. I remember. I gotta find out what Mark D drives.
I think the chat's open right now too. There's a bunch of stuff I got to do in the background here. I think at least the YouTube chat is open, and it's on top chat, not live chat.
All in on electric, and I'm just not sure kind of where the demand is. I guess that's one of the questions. That was the first question I asked. Exactly. After people bought the Hummer, the early adopters.
See here.
Right.
Sort by newest.
All right, let's get some company news right now. Steve Rappaport.
Paul, following a record high earlier this week.
Customization. So good morning to all of you out there. So there's a warning to you. You had the warning video. You had the warning video on Sunday 2 weeks ago. You're getting a new warning video today. Well, this isn't a warning video. You're getting an update warning that there's a potential reversal in progress. So just needs to be confirmed. We bought that reversal yesterday. What was I also told yesterday? Never place a trade before CPI. Well, I did. There you go. I did. I will say this: if we had traded up into CPI, I'd be like, fuck that. I ain't doing shit until CPI. But you needed so much to. You needed like the worst CPI print. You needed like hot as fuck. You needed like 800-degree coal-fired oven CPI prints to the upside.
And it underscores the company's drive to make its streaming business profitable by September of 2024.
Thanks, Charlie. Disney stock is now up more than 1.25%. And Meta is looking now to rehire many people it laid off several months ago. The tech giant
Still not printing TMF for me though.
Cuts that ended in May. Those layoffs are part of CEO Mark Zuckerberg's plan.
TMF. So I'd hold them into do I hold them into Friday? They probably don't want to print them, do they?
The company stories we're following this hour. I'm Steve Rappaport.
Up $5, up 1.16%.
Changes in an instant, so don't miss a minute. Listen to Bloomberg Radio anytime, anywhere around the world on the iHeartRadio app. Tune in, the Bloomberg Business app, and Bloomberg.com.
A little bit of a break right now on R2.
From around Bloomberg News.
Israeli Prime Minister Benjamin Netanyahu spoke exclusively with Bloomberg.
Joining us now, the CEO of Uber, Dara Khosrowshahi.
Wide-ranging conversations with Fortune 500 CEOs, big-name investors, and business.
Nah, if they were cheap, they cost me nothing. The spread on them was stupid.
Bloomberg Talks. Subscribe today on Apple.
Like the spread was so stupid on them that I was like, they're like it's like trading degas. They either hit or they don't. You're either gonna print 500% or they're going to zero. It's not like an investment or a anything like that. It's more of a gamble. I had them print. I traded them 3 or 4 days ago, and they printed for me. So, well, there's still a free trade for me. So I just expect them to go to the moon. Like there's no like expectation that they. Well, I don't know. Maybe if you don't know anything about trading gas, you're trading it knowing that it's going to zero. There's never an expectation that it's a winning philosophy or a winning I make all my money on gas. Like anybody that says that, it's probably like 1 out of 100 gas traders can say that make that statement. They call it the widowmaker for a reason. So oftentimes what happens is, well, you trade it and you think it's like something that's sustainable that you do. So the idea here would be if it's going to print 500%, I should probably, and I've already won one, so probably make that trade 2 or 3 times, and it'll still print for me.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Plan.
I think they call it the widowmaker because I think people win it once. They're like somebody tells them you have to buy this shit, and so they win it once, and then what they do is they think that's like a strategy to win the market, which it's not. It's like pure gambling. Well, it's not pure gambling. It's actually better odds. Most of the stock market is better odds than anything in Vegas and anything in a lottery. So when they say it's gambling, I'm like, it's not really gambling. I'm like, gambling is pretty much, even when you're counting, I guess if you're not counting cards, but when even somebody's counting cards, it's not really a game at that point or even fun or anything. It's still kind of cheating counting cards. Still kind of cheating, and usually someone has to get with you and tell you what's going on. Like pure gambling, I would say it's not exactly pure gambling. Like there's people out there that also say shit like I saw some others saying like you can't predict the stock market. I'm like, that's a fucking lie too. there's a lot of things said about the stock market that have some basis in truth, but aren't absolute truths either. So we're going to revisit this conversation, this market crash conversation, because we ain't done here in my view. And whether that was the top and this is the crash and all this other nonsense, I don't think you've seen the end of it yet. I don't think you've seen the end of it until September. And even then, that pullback will most likely be a some kind of a. I don't think like the. I think it's going to be more like spec growth will get hit, that kind of stuff. You'll start to exit spec growth. The indexes will probably be fine into end of year. Now, there'll be a major pullback, but they'll be fine-ish until end of year. And that's where I'm going to shift to is I'm going to shift into more of a conservative, bullish approach into end of year, and then look for a major pullback in beginning of the year. This is probably a place for bears. If you're a bear seller out there, if this holds, there's probably a place for you to place another correction trade, depending on how you structure it. If it's a put spread or if it's a put back spread, maybe put like November, December on it, November, December. And then, but target major correction in middle of September would be the point to that. Middle of September to middle of October. And you'll probably have that ability to do that once we go back, and I think we're going back. My thesis is that we're going back for way higher highs. But at a minimum, you could probably start that trade and the return of the scene of the crime. Like, hey, I want to end that early. I don't believe you, Cap. I'm going to fade you, and I think that was the top. You'll likely still get a chance to revisit the previous yearly all-time high to put that thesis to test. If you do that, even if we continue higher, the way to trade that, too, in my view, would be my view on that trade. So if you're a seller here, if you're a seller and you're listening right now, so I did this for bulls too. I did this for bulls 2 weeks ago. So I'm going to do it for sellers now. If you're a sell side, and you do think that was top still, that's still your thesis. If that's still your thesis, which I don't believe you, but if you think that it is, as we come up here to close this gap above, see this gap right here, this giant fucking gap you left behind? Yeah, I know you wanted to. Yeah, I know you wanted to close that gap. I know. Or let's just say we go back down here, right, to retest, and boom, we have that one last low. Okay, you won. Still, I would say to you, we're going back up here, okay? So that big trade that you're looking for, that big corrective trade that you're looking for, like a putback spread right here, regardless if we go here right now, regardless if we bounce right here and head higher, doesn't matter. Doesn't matter if it's here. Doesn't matter if it's straight up, bounce here, or bounce here. That trade will be there for you, I believe. My view, you're going to get that chance. So that's even if we get continuation of the upside. If we knock out those previous highs, or not the previous, if we fail the previous high for September, October, I don't think we get the new high until January 1. But if we do get that previous high from 2022 into September, October, I would still take the put back spread. That's not a put back spread. If you don't know what that is, look it up on your own. Go to YouTube. Options Industry Council will explain it to you. What that will do is it'll give you the time to for the market if it does go up a little bit, and then roll into September. to clean this one out, and more than likely that will go even lower. We'll go way down here. So there's a nice putback spread trade here. Is my point that there is one there for you. So if you're looking for that trade, I would set an alert up here at 45.80. I don't know if we hit it this week, next week, or if it's in 3 weeks. I don't know if we come back down and test the hourly trigger and we actually close that gap down below. I don't care either. And you shouldn't either. You should just have an alert at home that's like 448, or I think it's 458, 0 on SPX. Set alert that sends it to your phone or an email. If we tag that, you start trying to build a trade that maybe ends in December, and you're going to close it in September, October, maybe even farther out, January, something like that. So just for you, if you're a seller, just be aware of it. Okay? Please. I'm begging you. I'm not trying to hurt you. I'm trying to help you. So.
On Fifth Avenue, on Madison Avenue, like we used to pre-pandemic. Those folks have money, and they
Put that on your calendar. Just be like, I'm going to pencil in what Cap just said. I'm going to explain it to you another way, too. If you don't understand what I mean by the previous high and the new high that's expected, I'm going to show that to you right now.
For example, Rolex watches on the second
So just back here on SPY specifically.
far higher. I'm talking 2x.
I'll show it on SPX maybe. I don't know if I can. So hold on here.
They finally have been coming back down, high-end watch prices. And when I saw that story this morning,
So I want you to see.
oh no. Well, the first thing I thought was Sam Fazeli.
I want you to see that
Pharmaceuticals for Bloomberg Intelligence. He's a
we've
big
already
guy,
hit
lives
up
in
here.
London, lives in France, big wine guy. He was just explaining.
So we've already tagged this. Boom. We've already tagged that right there, okay? Then expect by that September roll, October roll, that we fail right in here, okay?
We talk about the Chinese consumer almost like we talk about the American consumer. I mean,
We're going to fail this one in September, October, roll it down for a major correction. Then we'll come back for December, January 1st. You'll get the whale breach above, and then you'll get the major roll for February, January, February, somewhere up in here. That thesis is very much alive. You may not believe it, but it is. We could trade 425 today, and that thesis is still alive right there. So, but just pay attention to it, because there's a lot of money to be made on this failure right here. Ton of money to be made up here. Ton of money for that. That roll should be more amplified. Expansion of volatility, right? We had some volatility just come into the market. The next one, there'll be an even larger, like cone-shaped, megaphone-shaped, whatever you want to call it, expansion of volatility here, and then an even larger expansion of volatility here. And this would be your trough retest, or as the bears would say, failure and depths of hell, right? You guys understand this concept? Hopefully you do. If you don't, get inside of the Discord. Some people in there can explain it to you. This concept. So there we go. So just right now for bears, you had your first pullback. You had your first correction, in my view. Now this all needs to be confirmed. So we are looking for some kind of a confirmation down here, wherever this hourly trigger is, whether it's today, tomorrow, next week. This needs to be confirmed at some point. I had a confirmation on the opening bell down here. The 15-minute and the hourly is showing that reversal, so you'll get another chance to get out if you need to. But we are starting to show a trend reversal, 1 to 3 day and possibly 1 to 3 weeks. So be aware of it. You guys understand that concept? So we get this. We get like a little bit of like vol like this, right? On this first pullback, you get a larger pullback in the fall, and then in the late winter, you get a major pullback, right? Just this expansion of volatility, good and bad, and then it culminates in some kind of a major move. Now, can things change? Yes. there's things in the market we don't know. There are unknown. It's a prediction. It's not a, hey, we're going to do this. It's that everything right now says we are going to do that unless something changes. So if we start breaking 425 and we're not coming back up and there's some like unknown news, I'm going to expect too that rollover in January, February will be associated with structural defects in China. We've discussed that here before too. Drunken Miller made a great comment earlier in the year saying China is going to be fine until beginning of the year. It wasn't just Drunken Miller either. There were some other people. I showed you other people that were talking about this in the spring. Anybody that's in here every day knows this stuff. So if you're a new follower, you may not know this stuff, but people that are here every day know this stuff. You should see, like, we're going to deal with China's structural problems with their economy. And that would be the blame assigned or associated with that coming into Lunar New Year, right? So I would expect that kind of a thing, and then some kind of a resolution. We saved the day. We improved relations. We're back, trade back on again with China. Some kind of nonsense like that. There's another thought process here, too, of cutting rates. I want to talk about this, too, with you briefly right now at this moment. Likely the Fed cuts rates. Likely the Fed cuts rates in, let's call it summertime. Late spring, early summer of 2024. You're also going to get inflation bottoming. And you're also going to get likely some employment stuff happening. And some kind of a front running. Now, if the employment stuff doesn't happen, there's a key point here. If there's still jobs available and job stability and unemployment rate is still good, but we are going to cut rates, that will determine how deep that rollover is. So if I don't know if you understand these concepts, but and they'll front run it. So if there's an expectation right now that they're going to cut by summer of 2024, if there is that expectation, if you've seen inflation come down, and but you don't see like jobs and employment get destroyed, that will matter to how deep that front running of pricing in rate cuts, how deep that move will be in February. And we'll go over that as we get there. So as we get closer to that February or December 31st, we'll get better price targets for that roll. And these price targets held up in 2022 as well. So I want you to know that when we get into that time frame, we'll have exact numbers for you. Like this is your first target, this is your second target, and this is the worst target. For how bad that won't be a correction. That's going to be a test. I want you to know that. That's not going to be corrective. So that February, January move should be violent, should be destructive, and we're going to check that trough. 100%. And we might bounce off it. We might break down and test like 3650 or 3450. Depending upon what's going on in the macro picture, depending upon what's going on with China, that will matter. Maybe that cleans up the inverted yield curve to get down there to 3450, 3600. You get that final bounce. We're either going to bounce off the top of the trough, or we're going to go down and retest that low. But regardless, either way, right? Either way, as an investor, as a trader, you should have bought that fucking low, right? That's the point. And when we get back down there again the next time, you should buy that low as well. And in 5 or 10 years, you're going to still be here with me or check back in with me. We'll look back on these last 5 or 10 years, and we'll see that those are places that you should have went long, right? You'll see that this market will continue higher. You will see that you had tradable bottoms all along the way. And we also know that if we have a fraud moment, the truth is, if we ever do have a fraud moment, they're fairly easy to see. Like you break below those lows and you start to reject and start trading lower, we know where they are. We actually know where they are. I went over this once I don't know if I went over it in that previous Sunday stream, but I went over it once with a small group with like Joe Donut and some people. And I even showed them like, when we broke below the actual lows of every fraud in the U.S., there was only 2 times in history, I think 2. Only 2 instances going back to 1894 where we broke below the actual bottom of the market. Now, this includes 2008. We actually did tag the bottom of the market in that final roll. But in no other instance, except for 2 times in history, have we traded lower than that low, and that was the Great Depression and World War II. So unless we have some event like that, like World War III, or another Great Depression, and I mean a real Great Depression where you're all like walking up highways across the country, looking burning tires. You got like a hobo stick and stuff. Unless you have something like that, we kind of know where the bottoms are. Not even kind of. We know them to pretty much a tick. So stay tuned over the years. Stay tuned over the next year. Stay tuned into springtime. Stay tuned into the next 5 or 10 years, because it's a great process to watch as it unfolds. I was thinking about Joe this morning because we go over this stuff every 3 months, 6 months, a year. And it's all held up. None of it's not held up. There's like, we know where even the depths are. Like, you expect the dip to be out here. This is like, you have a 15% chance of this happening. You have a 5% chance of this happening. Now those chances are going lower, even lower now, right? That kind of stuff. So stick with me here for the next, till springtime. Stick with me the next 5 years. I've been with these guys for a few years now, and it's all these predictions are working, so they haven't failed once. As a matter of fact, these predictions I'm giving you now, they're fucking valid, man. They're valid into springtime, and you're gonna see that bottom get bought. We're gonna trade 5,000 off that bottom, then we're gonna start trading 10 and 15,000. Now that sounds insane to you, but that'll be the next 5 years, the next 10 years. So coming down now. Trading debt now down to test the 1 minute 129 EMA right here. Remember that we always talk about testing down below here, so we're going to look on the 5 and 15 minute. Got that test right here. This test down is a 5-minute chart. You know that upward trend is bullish when we're above the 5-minute 27 EMA. This is bullish if we stay above this. On a 15-minute basis right here, you are looking for the test right here. We'll give a little thing right here for you. Another little pocket to look at. This isn't actually the one that I'm looking at, though. Yeah, I think that's about it. Somewhere down in here. The one that I'm looking at is 48.43. So I'm looking for a dip buy right here. 448.43. This is what I want to buy, is that right there. 448.43. Let me write that in. Oh, like Cap would love to buy. That's right. I don't think I'm going to get it, but that's what I would like to buy down there. 5 minute, 1 minute. So I would like to buy this right here. I always like to see that, like, I always like, even on these squeezes, I like to see that bounce. Productive. That nice consolidation into tomorrow for a leg higher. Bring this over for you. So watch this right here for you. Make that yellow so it's different color. Still catching a bounce. Remember, this is this red line right here, right? On a 5-minute chart, this is trend. So I want you to, I'm going to leave it on the 1 minute here so you can see it. So you don't get too so this is trend right here. You don't want to see this break. So you can see it there. This is where people get panicky, right? On 1 minute charts. This is where people get stopped out when you should be getting stopped out above. This is where Cap wants to buy right there. Ooh. Ooh, yeah. Oh. Ooh. Yeah, I am. I'm expecting a major correction in September, October. And then I'm expecting a fucking roll in like January, February. They're going to return it. They're going to attempt to return to the lower scene of the crime. Jesus, I said I was going to go. I'm supposed to be at a meeting right now. So I'm like, oh, I want to buy some fucking one dates again. I bet you these guys are pissed at me right now. I hope they're not on stream. So I'm looking at Friday calls again. It's a nice place down here for a call spread too for next week. Like next Friday, a call spread down here would be beautiful. I'm looking to buy it today. I think this is a great place to buy like a weekly call spread in the money for next Friday. With like some upside targets of 459, like 448 to 459 for next week. Maybe 2 weeks. You always got to be here before, though. You got to always say where you're going to buy. Never after. You always say where you're going to be buying it before. Never after. Never after. Never works being after. th, 14th, 15th, 16th, 17th, 18th. So 18th. SPY. August 18th. 459. Shocker. Look at that. Somebody's already on them. 17,000 calls on shocker. August 18th. 460 C's. Next week, next Friday. Trading 33 cents right now. Dirt cheap. Dirt cheap calls right here. 459, 460s are 32 cents right now for next Friday. So they're very cheap right now. Extremely cheap. For next Friday, for a return to the scene of the crime. So today's Thursday, right? That's 7 sessions. Plus a weekend. Dirt cheap calls. 460 C. There's a starter position. I'm on him. The starter position for next week. So I'm on a starter position of calls for next week, for next Friday, 460C. 460C for next Friday. Just waiting for a confirmation here. Damn, Chase, I would have sworn you should have told us in chat you were buying puts up here, man. I always love seeing like I'm buying puts. I sold puts before it happens. Yeah, they're dirt cheap. 33 cents. I'll take them. for 7 sessions plus a weekend. I'm on it. Trading 33 cents, so we'll just leave those in the background and see what happens. We'll revisit those next like Wednesday. Next Thursday. Okay, so as I told you earlier, I have a meetings I have to get into right now. I'm going to leave the stream up for you. As I told you at the start of the show, I went over what you're looking for, right? You've got the squeeze on the opening bell, monster move for bulls. You had the retest for bears to get out at 448. They have another opportunity right here to get out to confirm the 15-minute. Their next chance is going to be above, I believe it's at 452 or something like that. So this is the next chance for a bear to get out of shorts and all that kind of stuff. Bull's looking to confirm a 15-minute reversal and then an hourly reversal to the upside. I've added some calls for next Friday in here. I have to get into a meeting today and tomorrow. I'll stop in at key moments. So I'll be here with you key moments. So let's give you an example. So I don't know if we break below, right? We like break below hourly trigger. I don't know. The red line comes down, the white line comes down. We confirm we're gonna, I don't know, make Apple hit 174. I'll get in there with you. If we go down there, something like that. If we begin to confirm to the upside, we had our target tagged above. This is PT for today was 452.21. Pretty close. I still don't think we're done there. Next PT above that is 454.14. So that's your next target. So if you're looking for calls for next week, or for this Friday or something like that, 454.14. You've got for tomorrow. I'm not going to expect tomorrow's event to be negative in any kind of way, shape, or form. Not the anticipation that people have for it. So there we go. So I'll see you guys. I'll leave this up for you. I'm going to leave the stream up just as it is. Whoop. I'm going to leave the stream up for you just as it is. And then another side note here. Hold on here. I will. Hey, buddy. I'm going to leave up this chart here for you, just so you can see it. It's a 30-minute SPY chart. I'll leave this up here for you in the bottom so you can watch it. Watch my cursor in the bottom of my screen down there. Watch my cursor down there. We still have some more to go. Like, we could come right down here. Tag this target right here, 448 and some change. That's where I am right here. See, my cap wants to buy this. I already bought this, though, but I'm a little early. But, it's got 7 fucking sessions in a weekend, dude. I don't give a fuck about a pin strike right here. I'll be honest with you. So just this right here. I'll leave this up for you so that you can watch this. And I want you to tell you this, too, if you're a bear. If you want to get bearish again and get a new low, you have to break below. I want you to know something. When I warn you if you're a fucking bear here, okay? I'm going to fucking warn you. You see all these things turning up right here? You see that turning up? That's not bearish. I would like, you can trade, you can sell, just be like, take the money and run. Unless you confirm underneath here. Watch my cursor down below there. You are in buy the dip territory right now. So I'm giving you fair warning, okay? This is buy the dip, not sell the rip. I'm going to show it to you right here, unless you get a reversal. This is the last time I'm going to tell you, okay? You see these 3 lines down here? I'm doing it on a bigger screen. Hold on here. You see these big lines down here, right? Watch my cursor down there. See these lines turning up right here? Just be careful, okay? Well, when you see these lines over here, see these lines right here turning up? This is indicative of an upside move coming, so just be careful, okay? Please, please, if you're a seller, please be careful. Like, be tactful. Take the money and run. Look for your next entry. Just even right here. See this right here? You can look up here for reversal of the downside if you want. Re-enter down here. You know how this goes, right? Be tactful, please. Looks like a reversal to the upside, so it's gonna look. It looks like dips are gonna be bought. Nice, good job, guys. Good job, Dark Helmet. So I'll leave this here for you. Maybe I can put it on a 1-minute chart. Now the 30-minute seems like it does what it. So just so you know, the 30-minute velo is what you need. So watch my cursor over here. This is the stuff that you need. So like the triggers matter, but the velo in conjunction is what matters. Like you want to be buying these dips down here. Velo on daily on SPY specifically, you've got like 0 line, right? That's neutral. You don't want to see velo go below 0, or else we start selling rips majorly. That's a correction territory. We're not in negative velo on daily right now in SPY. We're at 0. You're going to expect now for all these dips to be supportive if velo becomes positive, right? You get like 0 to 5, 0 to 10. You're going to switch to a positive environment for the SPY, for dips to be bought and selling the rip to be done. So let me explain this in a better way. So on daily velo on SPY specifically, okay, ES, SPX, if this was 100, right, positive 100. If this was 50, this was 0. This is 25, this is 50, and this is 100 negative, okay? So you got negative 100. This is, let's call this 0 right here. Let's just say this is 0. It's a 0 line. So as we're coming up, market is supportive, market is supportive, market is supportive. Right? Pull back, pull back, pull back, pull back, pull back, pull back, right? It starts to come up again. It's supportive, right? You can expect dips to be bought. If it breaks below, we're in corrective territory. Sell the rip, 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 sell the rip. Buy the dip, 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 right? Violent as it heads higher, then market becomes supportive, right? Same kind of a thing. So right now we're like right here, and we're showing signs of another bull run right now, showing signs of it. So just want you to be aware of that. Unless we start breaking below and holding, and velocity on daily trigger starts to go down. And right now velocity is showing up, and the trigger is showing up too. So just be careful if you're a bear, please. For that next corrective move down in the marketplace. I'll see all you guys later this afternoon. I'm going to put some news on in the background and the financial juice for you. I'm going to leave all of this up for you here. I'll be in the office all day long. I have some technical things and so I have to do. I can't not do it outside of office business hours. I apologize for that. I want to be here with you guys, and I can't. So I did buy this down here, just so you know. So I did get my buy-in with you. If you've missed the chance to enter long, this is your second chance to enter long. You saw me enter long yesterday in the depths of hell with some major money in the market. I don't know what else to say to you. I'm sure some of you are going to come back in a week or two and be like, can I get in now, Cap, or something crazy like that. So there you are. If we have a major reversal or something, we go down even deeper than the 174, I'll reconsider for a corrective move to the downside, like something more major. So like Apple traded 177. If it trades 174, I'm going to stay in these positions, especially the one that's for September. But if we start breaking like 174 on Apple, like rejecting there and wanting to go lower and a major market move down, I'll reconsider and possibly close one side of that trade and get extremely bearish. But right now, nothing's showing that. So nothing was showing it at the top either. So we'll see what's up. I wish you guys all luck today. I feel bad. I feel like you guys are my family. Like, I don't want to leave my family right now. So we'll leave this up right here. Just so you know, there's a very small gap down below right here. This is where the pivot point is. The tiniest of gaps down here. Let me see if I can bring this up so you can have a good look at it. Daily trigger, hourly trigger, R2, pivot point. A very small gap to the downside. PT up here, R3 up here. STX sell if you want to know where it is. STX sell is 454.14. I don't expect that, though, until the weekly, maybe. Tomorrow or something like that. Love all you guys. Please like and subscribe, share these videos, tell your friends out there. And you guys are getting a website soon. It's looking really fucking good. Just as a website update, it's very complicated to do what we're doing. It's not an easy thing to do. It's not like I'm popping up gamma levels and writing a fucking post for you every night and morning, on a fucking Excel spreadsheet or something like that, and then working up to like building tools. We're trying to launch with something substantial, so just be patient with us, so that I'm trying to do this for retailers. I'm not here to make money. I want to I have my motivations and my drives are to give a website for retailers to have an edge. It's not an easy thing to do, to give a website that gives you an edge in the market. Oftentimes you'll pay for a service and it gives you it tells you like the upside, the middle, and then the downside, and there's no conviction in that. So oftentimes those people try to sound like they're smart and look flashy. They have to make up for that by giving you all those outs so they don't look bad. No one wants to be called out for like making a wrong call. It's all about image, right? Like you have to maintain an image. You have to maintain an image. Like I have to like rent a mansion and pretend that I'm living in a mansion. I have to rent a G4 and pretend I own a G4. I can't make a call or a conviction as to where we're going because I don't want to ever be wrong, that kind of stuff. So there's like that model, and I don't like that model. I'm always looking for an edge, and it's hard to get an edge. So the two ways that I see it getting an edge is, or three, there's more ways, but like time and market, trading with somebody else, some kind of tools that tell you, hey, expect a bounce here. Hey, expect a sell here. Hey, expect this to happen. Is it always going to happen like that? No. But enough, if it happens enough, 70, 80, 90% of the time, it is an edge. And that's the intent. And the other part of the intent is to make it sustainable for a retailer so that a retailer has a fucking edge. Now, that work has to continue in the future, too. If that edge is lost, right, there's always has to be development and that kind of stuff. It has to be sustainable. So If it doesn't work, it doesn't work. If it doesn't become sustainable, we're going to shut it all down. Because I can't do just this forever as for what it is. It's cost me a lot of money and time, my family, all that kind of stuff too. And so I want to be able to like leave this for retailers because I felt like I always paid for this stuff and I never got what I was looking for. I always felt like there was something lacking, and I'm hoping we can do that. So we'll work on it over the next 2-3 years here and see if it works. See if it's something that is an edge, and we're gonna ask you guys too along the way to help us with this edge. This is something where we're gonna work with the community too. So we have people in the community inside of Discord, people that talk to you guys on the phone, text message, all that kind of stuff. A lot of you know there's a group of probably 20 of us right now, and this isn't like one guy. This isn't like just CaptainJimJames. This is like a solid group of serious people working on this in the background, professionals working on this in the background. This isn't like some fucking Davey day trader working on this. These are like, I've got a machine learning, artificial intelligence staff engineer from one of the biggest tech companies in the fucking world. Like, no joking. So, like, I got traders that are professionals that are giving me guidance in the background. There are, like, some serious motherfuckers, sorry, I shouldn't be saying that, in the background trying to help us along here. So, hopefully we can make this work for you as a trader. Here goes your test on the hourly trigger. So that's where an update where we are, and we're doing a bunch of stuff in the background to try to get this to you. And I will be back with you at some point later this afternoon. I'll check back in with you today, and I'll check back in with you. I'll be here again in the same kind of fashion tomorrow as well, so you can see if this works for you. You'll all get to test it. There'll be a free option for everybody to test it out. There'll always be a free way to work your way around it. There'll always be cheaper entries too if you don't want to pay for all. There's like different structures. So like, yeah, I just want part of the Discord, or I just want this, or I just want that, or I'm working my way around here. There's a minimum entry too to try to support what we're doing in one way or another. So there's like ways for you to get by if you're cheap or free or I don't know, poor or whatever that is. But this stuff does cost money to put out. This is expensive stuff. It's costing a lot of money. It costs money with attorneys and engineers and professionals in the stock market, like actual stock market professionals. The data, the development. This stuff is not cheap. So we'll see if this works. And if it does, it does. If it doesn't, dudes, I'm telling you right now, you guys all know me. You guys have known me since I'm a fucking nobody. So if it doesn't work, we'll just stop it. We'll just go back to like a small trading group. 20, 100 people. We'll get together once a week or something like that. We'll hang out in a private Discord. We'll fuck around, that kind of stuff. So either way, it's all positive. So I want you to all know that. And I'll see you guys on the flip side. I'll see you guys later today. Yeah, I'll see you guys in a bit. And you guys are all there's going to be beta testers. There's going to be a free trial. There's going to be it's really cool. It's like, does this work for me? That kind of stuff. Does this give me help? Does this give me an edge? All that kind of cool stuff. It's really cool. We actually have some guys too. We got some other stuff too. We got we got guys working on like a training program, which is kind of cool. For people where you have like 4 trainers, I think it's 3 to 4 trainers. So you'd spend like one-on-one time with people, an educational series, find out what you guys are looking for, that kind of stuff, and then actual one-on-one. We have we have people that right now that are in like a modified program right now. They have proven wins, proven consistent winning. So that stuff's all super fucking cool too. Like we have actual people inside right now, beta tested, being trained how to trade with verifiable green accounts, like green every month, green month, green month, green month, green month, green month. So this stuff's pretty fucking cool. That's going on. So yeah. Look forward. I'll look forward to launching this with you guys here really shortly. I'll talk to you guys soon. Yeah, I'll talk to you guys very soon. Let me put the stuff on for you. I'm thinking about this right now because it's kind of blowing my mind. Kind of blowing my fucking mind. I'm having like a moment. Like if I could spend, it's like there's an example, right? I used to spend like $600 or $700 at one place. It wasn't one-on-one. It wasn't like dedicated trainers training me. It wasn't every day with like a group of people. And I'm like, I can't believe I paid all that money for all this. I'm like really like proud, like thinking about this deeply. It's we also have, dude, we got like somebody that's gonna come on board and do nightly recap videos for you. We got some cool ass shit coming, like cool as fuck, like badass shit. We got Gamma coming for you, dude. Like you guys want Gamma, like there's gonna be Gamma. It's like it's all kinds of stupid shit. So it's really cool. All right, I'll talk to you guys soon.
Daly says, I am supportive of the rate hike we took in July.
So Daly's out there talking right now. So he's blabbing away. Blabbing away. Blabbity, blabbity, blab.
Feds Daily
I'm going to
says,
leave this
support
on
holding
for you down
rates
here.
we would want to see a path of inflation completely downward.
Well, first of all, we can talk about 2% core inflation. Matt,
Feds
do you have
Daily
any
says
idea
the
where
key
that
is good
2%
price
target
inflation,
came from?
which is coming down,
No,
and shelter price inflation,
All right,
which
well,
we
most
project is
people
coming
don't.
down.
And in order to know where it came from, you have to read what former Fed Vice Chairman Roger Ferguson wrote not too long ago. He points out that 2% was a random number that originated in New Zealand in the 1980s. It didn't come from an academic study. It was just an offhand comment during a television interview, and everybody else said, yeah, that sounds like a decent number. Let's adopt that.
Will be
but the fact that...
Well, not just the Fed, right? I mean, that's been adopted by central banks around the world. Right. And quite frankly, without sounding too flippant, it doesn't matter where it came from. The fact is, Jerome Powell has stated time and time again that he's going to keep pushing until the Fed gets to 2%, or at least as near as damn it to 2%.
That's the risk factor that, hey, we're going to aim for this random number, even though the entire inflation regime and the entire economic regime has changed. The 2010s were an era of monetary stimulus, of a very anemic post-financial crisis recovery, and we were looking up towards 2% when job creation was kind of soft and consumer spending was weak and GDP was soft. Now, fast forward to the 2020s, we've had a regime change, and it's gone from monetary to $6 trillion plus in fiscal stimulus just in the United States. I'm not talking about other countries' fiscal stimulus. And so you go from an anemic economy to a robust post-lockdown recovery, and 2% is really a silly number. I want to convince the Fed that, hey, maybe you should be looking at looking down at a 3% target. Lawrence Ball is a member of the National Bureau of Economic Research. 2013, he suggested 4%. So this isn't completely out there. People have discussed that the inflation target is just kind of a silly random number. Why is the Fed chair so obsessed with it?
It's clear in their communications that they certainly are. Hey, Barry, we pretty much finished up on this earnings cycle here. Are we in the midst of an earnings recession?
Yeah, that's one of those things that we keep hearing people talk about. Oh, my goodness, look at this horrific earnings recession. And the problem with any given quarter is the tendency to forget the bigger context, forget what came before. I'm not a big fan of going X. Like, I think you have to look at the whole picture, but you can't completely ignore, hey, how do the earnings look without financials? How do the earnings look without energy? And essentially, more than 100+% of the 8% downturn in this quarter's earnings is pure energy. It's just the downfall in energy. Now, remember last year when everything was stinking up the joint in 2022, energy was the only bright spot. You know, when industrials and consumer discretionary and even technology was looking at an energy shortfall, a profit shortfall, energy did great. Whether it was the war in Ukraine or other factors, you know, I'll let the economists debate. But clearly, coming off of that really hot year, now year over year, when we look at energy profits, they're down more than 51%. So back that out, which is really aberrational. You have this giant surge last year and this giant collapse this year, plus 1.4% is pretty decent. And when we look at quarter over quarter, earnings are up ex energy plus 8.3%. That's pretty substantial. Just look at the S&P 500 year over year with energy, and we're up 0.6%. So not the worst sort of thing in terms of revenues. That's 0.6%. So I don't understand why there's all this hand-wringing about a earnings recession. It looks pretty good from where I sit.
Well, so in order for the Fed to keep inflation down with monetary policy, I would have to think you need an earnings recession, or you need to keep earnings growth in check, right? Otherwise, how does raising interest rates only reduce inflation without affecting the rest of the economic picture?
So let's go to your fundamental principle there. In order for the Fed to keep rates down with monetary policy, let me remind everybody, we spent more than a decade with rates about zero, and we had no inflation. If zero rates didn't cause inflation, maybe higher rates isn't how you cure inflation, especially this particular flavor of inflation, which has been caused not just by fiscal policy, but, hey, we had a crazy supply chain snarl that finally has been mostly resolved. We have a shortage of single-family homes. We still have problems getting enough semiconductors for cars, and there is undeniably a shortage of labor. I don't see how the Fed raising rates further from here is going to build more houses or get more people into jobs, get more potential employees to be hired. Those are the drivers of the inflation we're seeing.
But
higher rates doesn't affect that.
Isn't, dumping bucket loads of dollars out of helicopters partly responsible? I mean, how much fiscal spending was there? Obviously, there wasn't inflation for the decade of zero rates because we weren't sending $5 trillion out to the American people in cash.
Right. So you had $2 trillion in CARES Act 1, almost another trillion in CARES Act 2, a fourth near trillion in CARES Act 3. So that's what's already coursed its way through the system. That pig is mostly, not fully, but mostly through the python. Looking forward, the Inflation Reduction Act, the Semiconductors Act, the Infrastructure Bill, that's also stimulating, but that's spread out over 10 years, so it's going to be much more modest. And again, another reason to think of 2% as the wrong inflation target, given all of this fiscal stimulus that's in the pipeline, maybe 3% makes more sense.
What are you driving, Barry, today, this weekend?
Well, it looks like it's going to rain here, so the Cabrio is going to stay in the garage. I don't know. It really depends on where we decide we're going to have an office meeting, and depending who shows up and what they've seen, I may and the possibility of rain, I just may take the all-wheel drive Audi and show up, even though that's really a race car, but you can drive it like a normal car when you want.
That's the R8 that you're talking about.
Yeah, the V8 6-speed gated shifter. It's a fun car. And P.S., one of the things we always tell investors is you have to keep your wits about you when the market is selling off and people are panicking. I picked up that car for a song in March 2020, or maybe it was April 2020, because everybody was freaking out. The thing that investors seem to overlook constantly is, you got to sell them when everyone hates them, and sell them when everyone loves them, and buy them when everyone hates them. Not stocks.
It applies to cars, too.
Long-term holder.
Right.
But cars and other collectibles, There is a very
All right, Barry, we're going to have to leave it there and enjoy your driving. Barry Ritholtz, host of Masters in Business for Bloomberg Radio. This is Bloomberg. Let's go to Steve Rappaport with some company news.
Paul, shares of Disney climbed as much as 3.8% this morning, the stock posting its biggest intraday gain since February. More from Bloomberg's Gina Cervetti.
The company said capital spending and outlays for movies and TV shows are coming in lower than projected. Some of that was due to the writers' strike, but Disney has also been on an aggressive cost-cutting push that's included job cuts. Streaming is still losing money, but less than it was a year ago, and the theme parks business was strong. Disney is raising prices on its ad-free streaming options, Disney Plus and Hulu, by as much as 27%. It also plans to start cracking down on password sharing, as Netflix has done.
Thanks, Gina. Shares of Disney currently up more than 2.75%. Luxury goods maker Capri Holdings stock soars 56% after Tapestry agreed to buy the parent of Michael Kors, Versace, in an $8.5 billion deal. Tapestry, which owns the Coach and Kate Spade brands, will pay $57 per share in cash. The companies expect to close the deal by the end of the year, pending approval by regulators and Capri shareholders. Tapestry stock down more than 12%. U.S. college endowments are rebounding from their worst returns since the Great Recession. Endowments earned a median 8.7% before fees in the 12 months through June. Sounds good, right? But hold on. Increases in costs for buildings, salaries, financial aid, those all cut into the gains. The National Association of College and University Business Officers says colleges need an annual gain of 8.2% to keep the pace with inflation and spending. That figure is up from 7% in 2019. Those are the company stories we're headlining this hour. I'm Steve Rappaport, and this is Bloomberg.
Bloomberg Radio is where you are. Get live business news and market headlines from anywhere, 24 hours a day, via your mobile device. Listen on the iHeartRadio app. Tune in, the Bloomberg Business app, and Bloomberg.com. Get the news you...
Hello and welcome to The Kroger Show. At Kroger, everyone wins when it comes to saving big. Because when you order online through the Kroger app, you get the same great prices, deals, and rewards on pickup or delivery that you do in-store, with no hidden fees or markups. So no matter how you shop, you'll always save big at Kroger. Kroger, fresh for everyone.
Save big on your favorites with the Buy 5 or More, Save $1 each sale. Simply buy 5 or more participating items and save $1 each with your card. Kroger, fresh for everyone.
You need to start your day in just 15 minutes.
We have more news on the latest indictment of former President Donald Trump.
The Fed taking rates to the highest level in 22 years.
Wake up with Bloomberg Daybreak, U.S. edition.
Ukraine is intensifying its drone strikes.
Preseason football, the Hall of Fame game in Canton, Ohio.
Available now on your podcast feed. Each weekday morning at 6 a.m. Eastern.
Tensions between the U.S. and China remain in focus.
Subscribe to Bloomberg Daybreak, U.S. edition today on Apple, Spotify, and everywhere you get your podcasts.
No one knows where this market will go. Right now, it feels like a wild ride. But one thing's for certain, there's a way through it. And the experience and guidance of a Merrill advisor can help you get there. Because where there's a bull, there's a way. Find an advisor at ml.com/bullish.
Merrill, a Bank of America company. What would you like the power to do?
Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor. Member SIPC, a wholly owned subsidiary of Bank of America Corp.
Hi, I'm Danica Patrick. Watching my nieces grow, play, and learn is amazing, but not every child gets to be carefree. 1 in 6 kids in the U.S. are hungry. This breaks my heart, and it's something that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste and gives it to families in need. To help, visit feedingamerica.org.
Brought to you by Feeding America and the Ad Council.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Risk on, although we paired a lot of the earlier gains on the major indexes. And it's all because of the core consumer price index. Stripping out food and energy costs, rising 0.2% for a second month. So that marks the smallest back-to-back gains in more than 2 years. The cooling may be enough to keep the Fed on the sidelines. And that's the kind of thinking that had pushed the stocks higher. Although, again, as I say, we're all pulling back on the earlier gains. On the earnings front, Disney shares right now, they are up 3%. Analysts welcoming the moves to cut costs of the world's largest entertainment company. And on the earnings front, you have 454 companies in the S&P 500. They have reported so far this period, 57% of those delivering positive earnings growth. Right now, the S&P 500, 24 points higher, up 0.5%, 44 at 92 on the index. Dow Jones Industrial Average, 211 points higher. That's up 0.6. The NASDAQ 100 up 102 points, a rise of 0.7% right now. 2-year yield, 2 basis points lower. That's at 4.78. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney here in the Bloomberg Interactive Broker Studio. I'm looking at the various video screens. We got this Virgin Atlantic launch going, this tourism mission, first tourist to space, and got some video. Pretty cool. I don't know. I just like this stuff.
I love it.
I think it's pretty neat. So anyway, Virgin Atlantic.
Although Tucker says they're not going into space, it looks pretty dark up there, and I see people floating around.
I guess it's like the edge of space. They get waitlists and all that kind of stuff. So
what would you consider, Tucker? What would you consider respectable flight to space?
When you're in orbit.
Okay.
He's a space snob. He's a space snob.
It's just like there's some debate over it. I don't think they actually went into quote-unquote space.
Yeah, you're like old line Apollo. You want to see that kind of stuff.
Yeah.
All right, let's get back to...
you would like to do that. Wouldn't you like to be on that flight?
Well, I wouldn't pay anything for it, certainly, but yeah.
Well, we know a guy. We know a guy. Don't worry. We'll take care of that. All right, the markets like what they saw from the inflation print today. Let's check with somebody who actually does this stuff for a living, Adil Zaman. He is a partner for Wall Street Alliance. Joins us live here in our Bloomberg Interactive Broker Studio. Adil, I like the print today. Matt thinks inflation's still too high. I'm a friend of the trend. I like the trends coming down. That's what I'm focusing on. How did you view the CPI print today, and how does that impact kind of how you're thinking about these markets?
So great to be with you. So we were very positive on this print, and the Fed waged a war against the 40-year high inflation by raising interest rates to a 22-year high, and it's clear that the Fed has won this war, right? Inflation has come down from around 9% down to around 3.2%. I think this is constructive for the equity markets in the long term.
Are you not concerned that there's a chance it comes back?
Well, what we think is that from this point onwards, the inflation will most likely start to cool off on its own, because even if you look at the unemployment rate, we think that it is understated right now because a lot of the layoffs have been in the tech space. And a lot of those workers are high earners, so they're not necessarily claiming unemployment benefits. And also, the Fed is going to be very careful about not damaging the unemployment rate too much in this politically charged environment. So we think it's going to start to cool off on its own from this point onwards.
I just saw total consumer credit rose $17.8 billion last month. There was a small monthly increase before, so credit had kind of stagnated, but now it's come roaring back, especially student loans and auto loans. And if people are able to weather 7 or 8% auto loans and are still willing to go pay these incredibly high prices for vehicles, I feel like they could push inflation higher. They could bounce it back up.
Fair point, but I also feel that at some point this excess savings that people have from the pandemic, they're going to run out of it. And when they run out of it, they'll start cutting back on some of the services, right? So they'll stop going to Bloomingdale's and they'll start going to Costco, right? So they'll become more budget conscious, and I think that will also start to bring inflation down, and the data is supporting that.
All right, so given that backdrop, Adil, the benign inflation outlook, still decent economic growth, although slower than what we've seen, what do you do here? Are you equities, fixed income? Where do you start?
Well, fixed income is also very attractive over here, but if we take a longer term point of view, I think equities is where you get the most bang for your buck. We are of the school of thought that we think in the short term you're going to get a correction in the market because seasonally this is a weak period of the year.
Yep.
So on the equity side, we would be looking at opportunities on a pullback. The two parts of the market that we like over here is the high quality momentum areas, and then the less loved stocks that haven't participated in the rally so far. So we would be looking at opportunistically on those areas on a pullback.
All right, so is that the Metas of the world, the Googles of the world, the Amazons? You'd buy them on a pullback, or kind of what's that first group for you?
Yes, so that would be certainly that's one group of stocks. The stocks on our watch list, for example, Apple and Meta.
Okay.
You know, Apple just came out with their earnings. The street did not like it because the iPhone sales went down. But we actually saw strength over there because we saw their service business grow, which is, you know, the profit margins are almost double that of the product business. So those are the type of areas that we would be very interested in on a pullback.
What do you think about, I mean, rates at this level, you're going to want to lock those in. Don't you think that a lot of people are going to want to lock in 4% 10 years?
Yes, actually, we have a lot of clients that have cash that are looking to lock in good rates. So certainly, I think that's in the short term, that is going to be a headwind in the market. But I think that in the long term, you get better risk-adjusted returns on the equities.
All right, so I mean, Matt's been overweight, you know, those Magnificent Seven, me not so much. So if I'm looking for this market to kind of broaden out a little bit, because I think I need to see that for just the health of the market, if I don't own the Magnificent Seven, if I don't want to go chase those things, where do I go?
Or should I take profits and get in?
You let it ride. Just let it ride.
Well, I agree with you completely. Like if you look at the S&P 500 up until the end of last month, it was up about 19.6%. You look at the equal weight index, it was up about 9.6%. So I would be looking at some of the less loved stocks. Like, for example, another stock on our watch list is Home Depot. Right? So Home Depot did really well during the pandemic because we were trapped in our homes and we just wanted to improve our living experience. Since then, the demand has subsided, but we still see a great long-term potential. Because in the U.S. we have a housing shortage and people do have to upgrade their homes, which benefits a company like Home Depot.
And you own Home Depot. You also own Apple. I feel like the market has soured a bit. Well, clearly they've come down below the $3 trillion value, and we see iPhone sales stagnating. Why do you own Apple longer term?
So we think that, you know, the service business, there's a lot of strength over there. So we like that. And then also we think that the iPhone 15 release could be a significant upgrade. You know, the quality of our phones are improving. So we are holding on to our phones longer before we're upgrading it. So I think this upcoming release of iPhone 15 could be a good catalyst. So, and company pays a good dividend. So
I just don't know what's going to change. The phones that Paul and I have are already capable of everything we need to do.
I got an iPhone 11.
Yeah.
That's what I got. I might upgrade, though. I'm going to take you to task on this Apple. Every time I see Tim Cook, I say, you got to raise your dividend. You got a dividend less than 1%. Man up, go to 3%, 3.5%. Are you surprised that they don't do that with all the cash they have on the balance sheet, all the free cash flow they have? Don't you think that they should raise their dividend?
Well, yeah, I mean, they're entering into a different phase of the business, and I think they are doing great with the share buybacks. And I think, you know, I think they have a lot more going on for them in other areas, which they want to keep their cash to take advantage of.
How about energy? You know, there's a sector that for a decade nobody cared about because, you know, it was peak oil and we're all going green. And then it's had a nice couple, 3 years here. And now we've got WTI crude oil, you know, back up at almost $84 a barrel. Do you guys traffic in the energy space at all?
We actually think oil is headed higher because, because, you know, the demand for oil, as the global economies grow, the demand for oil is going to continue to increase, and OPEC is going to continue to limit production, and the transition away from fossil fuels is going to take a lot of time. So we actually think that the oil inflation is here to stay, and that will keep going higher. And that benefits some of the larger oil players because their break-even on oil is very low, and with oil at $100 a barrel, they're making a killing.
Adil, does China play into your investment thesis?
Certainly, China is a major player, and you know it does have an impact. But we find opportunities more domestically in the United States, you know, and especially.
I just mean in that they, you know, their economy supports rising prices of oil if it does well.
Yes, so China is definitely a key player there. Global economies, India is a key player, and the U.S. also. You know, the U.S. economy is improving, so that's also increasing the demand for oil. So, definitely, we really like some of the larger oil companies that benefit from that.
30 seconds. What are you staying away from here?
So, you know, I think that there's a lot of quality investments right now that you can take advantage of. So I would stay away from the high risk, volatile, meme type of investments and just focus more on quality and look at it in pullbacks. And like you said, fixed income is giving you also an opportunity of a lifetime. 1 year T-bill, you're looking at close to 5%.
Yeah.
You've never seen that in a long time.
Yeah, it's just amazing. I know people that just roll those things over all the time. Adil Zaman, he's a partner at Wall Street Alliance. We appreciate coming in here live to our Bloomberg Interactive Brokers studio. Good stuff there. Looking at these markets, kind of giving up some of their gains. Still positive. We got the S&P up about 0.7%. Same for the Dow. NASDAQ, same there. So kind of a broad move here off of what was a fairly, I guess, in-line inflation data. And for those that feel like in-line is okay, that's enough for this Fed to maybe step back a little bit from the rate rise. There you go. There's all the information you need. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. Wildfires in Hawaii took residents of Maui by surprise as they raced to escape their homes, some diving into the ocean to get away from the fast-moving fires. At least 36 people have died. The governor has declared a state of emergency. The White House is pledging federal assistance. There's a new plan to push conservative voters to embrace mail-in voting and drop boxes in the 2024 election. It is a shift for the Republican Party, as Bloomberg's Nancy Lyons explains.
Back in 2020, then President Trump railed against the new methods of voting that many states were adopting due to COVID-19.
I think that mail-in voting is a terrible thing. I think if you vote, you should go. And even the concept of early voting is not the greatest.
But now Trump's allies are embracing those tactics, with his former acting Attorney General Matthew Whitaker leading an effort to encourage conservatives to cast ballots by any legal means. They even plan focus groups to test messaging and its impact on voter behavior. In Washington, I'm Nancy Lyons, Bloomberg Radio.
President Biden promoted the clean energy manufacturing boom during a stop in Albuquerque, New Mexico, at a plant that makes towers for wind turbines. His visit was part of an effort to promote the economy a year since he signed the Inflation Reduction Act, and he told workers that inflation's down, so is employment, and Bidenomics is working.
Where is it written that America can't lead the world again in manufacturing? Because we're going to do just that. The leading manufacturer in the world.
The president says Bidenomics is all about growing the economy from the middle out, not the top down. New York City apartment rents hitting new highs in July, even as there were signs that prospective tenants pulled back from the market. Prices on new leases signed last month set records. Landlords are pushing the rent limits. They're finding some are still willing to pay. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries.
Wake up and text. Text and eat. Text and meet up with a friend you haven't seen in forever.
Hi.
Oh, hey. Text and complain that they're on their phone the whole time. Text and listen to them complain that you're on your phone the whole time. Text and whatever. But when you get behind the wheel, give your phone to a passenger. Put it in the glove box. Just don't text and drive. Visit StopTextsStopWrecks.org. A message from NHTSA and the Ad Council.
Your business landscape is ever-changing.
There could be a lot more selling to come.
Ours is too.
Just getting some headlines I want to bring to our audience.
We also have the unknown of how much can financial assets take.
We have something else in common.
Those small caps continuing to feel the pressure.
We seek out the latest business news wherever we are.
A deep drop in Asian equities overnight.
U.S. futures also pointing to the downside.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
It's time for today's STEM tip. Okay, you know recycling is important. No one wants plastic in the ocean. Here's a cool way to repurpose a plastic bottle. Build an awesome terrarium. Cut a large plastic bottle in half and fill the base with sand, pebbles, potting soil, and your favorite plant. I chose an African violet. Put the top of the bottle over your base and place it in the sun. Your plant will grow sealed in its own ecosystem. Fun, right? Learn more at She Can STEM. A message from the Ad Council.
The Bloomberg Talks Podcast. Today's top interviews from around Bloomberg News.
An exclusive interview with the chair of the SEC, Gary Gensler.
Kathy Wood, the founder of ARK Invest. Thanks for joining us.
Wide-ranging conversations with Fortune 500 CEOs, big-name investors, and business leaders around the world.
The president of the Atlanta Fed, Raphael Bostic.
Back with us is Enon Price, chairman and CEO of Mattel.
Bloomberg Talks. Subscribe today on Apple, Spotify, and anywhere you get your podcasts.
Financial advisors, are you looking to add or switch custodians? Are you going independent? Interactive Brokers provides lowest cost trading and turnkey custody solutions for all size firms. Trade globally from a single integrated master account with no ticket charges, no custody fees, no minimums, and no tech, platform, or reporting fees. Plus, IBKR has no advisory team or prop trading group to compete with you for your clients. Switch to the custody solutions that work for you at ibkr.com/RIA.
You took the first step and quit smoking, but even former smokers may still be at risk for lung cancer. That's why SaveByTheScan.org wants you to know about a new low-dose CT scan that can detect lung cancer early. It takes only 60 seconds and could save your life. You took the first step, now take the next. Visit SaveByTheScan.org for a simple quiz to see if you're eligible and talk to your doctor about screening. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
You've heard the phrase, the voice of experience.
You're the guy that made the bet with Warren Buffett.
I get that might go on my tombstone.
There's actually more than one of them.
Writing on Star Wars was crazy fun.
The voices of experience tell their stories on Masters in Business.
When I got hired in 2013, M&A was dead.
I think life and markets are intertwined.
Barry Ritholtz hosts Masters in Business. Subscribe today on Apple, Spotify, the Bloomberg Business app, or wherever you get your podcasts.
The New Deal created American infrastructure that unleashed new opportunity. Today, we're doing it again with massive investment in modernizing our infrastructure to build for tomorrow. At Build America Mutual, we protect your municipal bond investments that help make it happen, building a vibrant future for our communities and your portfolio. Invest in the future of America with BAM insured bonds.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
Jelly. Jelly adjective. Jelly is a shorter, better way to say jealous. As in, Chloe, I am like so jelly of your unicorn phone case.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt US Kids, and the Ad Council.
The best of Bloomberg Business Week every business day.
The story among the most read on the Bloomberg terminal.
Bloomberg Business Week with Carol Masser and Tim Stanovic.
What does an Apple-developed car look like?
The day's breaking global business, finance, and tech news, along with smart analysis.
This stock has been on a tear.
The Bloomberg Business Week podcast.
Can we just get like 20 seconds from you on Bitcoin?
Listen live weekday afternoons at 3 Eastern or on demand wherever you get your podcasts. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash. And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. All 11 major interest groups in the S&P 500 higher right now. Communication services, consumer discretionary leading the way. The tamer than expected consumer price index that's led to betting the Fed's on hold, especially good for technology. You have Amazon up 1%, Apple up about 0.5%, Meta was up over 1%. Meantime, Jennifer Lee, managing partner at BMO, Nesbitt Burns, says one data point, probably not going to move the needle for the Federal Reserve.
I don't think it's going to change the narrative too much for September. I still think there are a lot of question marks, a lot of things that have to be answered before they make their September 20th decision. We did have Fed speak today. The Federal Reserve Bank of San Francisco, Mary Daly, saying the U.S. Central Bank has more work to do to control inflation, even as we got that data. S&P 500 up 33, the Dow up 256, NASDAQ 100 143 points higher. That's back up about a 1% rise. 2-year yield down 2 basis points, 477. Everything's big in Texas. The chairman, the former CEO of Phillips 66 is Greg Garland. He wants a swimming pool, but not just any old swimming pool in Texas. He wants to dam up a stretch of the South Llano River on his ranch, 150 miles west of Austin. It would be dammed for recreational purposes. He's hoping it'll hold back 12 acre feet of water, enough to create a swimming pool.
Swimming hole.
swimming pool hole.
Yeah. Wait, but it would be a 12-acre swimming pool?
12 acre-feet of water. So I don't know what that,
I don't know how big that is.
It sounds, but it's Texas, so it's big.
But an acre is quite a bit larger than your average swimming pool. Right?
But this is Texas.
Not surprisingly, he's getting pushback from environmental officials. But,
Water is scarce there. I mean, it's serious business. There was a Bloomberg Business Week story on it a couple weeks ago.
Was there? Okay.
Yeah. Water rights are very, very important. Yeah.
How about some car talk?
Oh, yeah. Hannah Elliott is going to join us right now.
She's there.
From Los Angeles.
Yep.
She is getting ready for this great Pebble Beach
Concours d'Elegance.
Concours d'Elegance. You've been there a few times.
I
have never.
You've got to go.
I have
it's
never
a been.
For you. And it's like everybody I talk to is like, oh, how can you not go to that? I just haven't really ever had time or been allowed by my boss. But Hannah is, like, it's her job. So she joins us now. Also, I think, preparing to drive a couple of sweet Aston Martins. Hannah, talk to us first about the Concours d'Elegance. And I saw your story about they're building a big barn for some old Ferraris. What's that all about?
It's honestly so exciting and cool. I'm really excited. I've gone for many years, and this is the most excited I've been for a while about a bunch of old, rusted out, completely derelict Ferraris that are for sale. R.M. Sotheby's, the auction house, built a barn display to recreate the way that these 20 Ferraris were found in Florida after a hurricane. You might remember 2004, we saw some pictures of a bunch of Ferraris completely demolished after a hurricane. Now we have the Ferraris for sale. They've reappeared. And they're actually owned by a very eccentric man you might remember named Walter Medlin, who's got quite a colorful history back to the 1970s or so. But these Ferraris are gonna go big, even though they're all twisted and completely rusted out.
Talk to us about the Concours d'Elegance. What is it, and who goes there? Tell us about why it's so special in the world of high-end automobiles.
Okay, well, Concours d'Elegance is a really snooty way to say a car show.
Yep.
And what it is a bunch of really nice, very well washed and detailed cars parked on a putting green and a fairway of a golf course.
And on Ocean Avenue in Carmel by the sea.
Exactly. It's actually on the Pebble Beach golf course. And there is a set amount of cars that are judged, of course, this Q-tip white glove type judging. But then also throughout the week there are auctions, there are other car shows, thousands and thousands of people come. There's kind of something for everybody. There will be car shows just for muscle cars or just for Porsches or just for, I don't know, old trucks from the 70s. It's really fun. But yes, to your point, the big climax of the week is Sunday's Concours d'Elegance, the car show on the Pebble Beach golf course.
Yeah, it's just extraordinary. I mean, this is big business, Hannah, right? I mean, I see stories on some of those cars that get bought and sold during the week, and particularly on Sunday, some huge numbers here. There's real investment here.
Yeah, this is kind of like art collecting in a way. We're talking about blue chip collectibles here. So the most expensive and rare vehicles in the world are bought, shown, and displayed. Certainly the auction houses will see easily over $100 million in sales just over the weekend, all told, through 3 or 4 days of auctions. But you have things that, there might be 2 or 3 of them in the world. Some of the racing Ferraris, of course, we remember the 300 SL Gullwings, the Mercedes with the doors that raise up like a Gullwing. So really iconic cars. This is the most prestigious car of it, really, certainly in North America, maybe in the world. You could say there might be a few in Italy that compare, but this really is, if you want to see blue chip cars and the best of the best and the rarest, this is where you go.
We're showing some of the derelict Ferraris here for those people watching on YouTube or streaming us on Bloomberg.com. Some of them look like they're in pretty fantastic shape. Others look like they're about to fall apart from all the rust. But they're still expected, even the one that, Hannah, the one that's completely crumpled and doesn't have a roof or maybe even wheels, even that is going to go for hundreds of thousands of dollars.
Yeah, barn finds are very interesting things. from what I hear, the guys that I talk to, really, if you're concerned about money, it's better to just buy the car already done. These are not especially, at this point, you know, you're going to spend a lot of money to bring them back, maybe even more than you'd spend on a similar car that's already done. So it's really, at this point, it's about the story, it's about the journey. The people who buy, you know, these twisted, crumpled cars are people who love the painful relationship of what it takes to bring a car back to life.
Let me ask about a new car, and that is the DB12. You've already driven the car somewhere else besides America, yes. But you're also going to get some seat time in a couple of Aston Martins coming up. What's the story with this company, where it is, and what it's producing?
You know, Aston Martin is really fascinating this year for a number of reasons. We know that they've really struggled since their IPO in 2018. They've got a very dynamic owner in Lawrence Stroll, and of course, Aston Martin is doing fantastic in Formula One right now, which helps a lot, at least from public perception and probably fundraising too. Of course, Lawrence Stroll's son is a race car driver as well. So there's a lot of talk about Aston Martin, and then when they bring in the DB12, which is a successor to the DB11, excellent vehicle. They've got the DBX SUV, the 707. I think I'll be in during Monterey. Fantastic SUV. I actually think you could cross-shop it against the Lamborghini Urus, perhaps. And you could throw in the Ferrari Purosangue as well if you wanted. So they're making really competitive products, but also they have really, it's been tough. You know, they faced liquidity issues. There's been a lot of financial turnover and executive turnover. Now we also know that they're tied in with Lucid. So there's just a lot going on at Aston Martin. It's a really exciting time, and I am looking forward to having some time with their executives to get the latest.
All right, Hannah, great stuff. Enjoy Carmel, enjoy Pebble Beach. Maybe get a little veal at Il Fornaio on the corner of Ocean Avenue there in Carmel by the Sea. Hannah Ellis, staff writer for Bloomberg Business Week. Man, we got to get you there, dude.
Someday, you know.
And you go for multiple days, and as Hannah was saying, all around the Bay, the Monterey Bay area, including Monterey, out near Salinas, all over the Monterey Bay area. Each day there'll be different shows, and you know it's not just there. So it's just amazing. And then it culminates on Sunday.
I mean, the next best thing for me is just having Hannah cover it, because then I read all of her coverage and get deep in it. So I feel like if she's out there writing about it, maybe creating some video content as well, that's good enough for me for now. And then one day when I retire, maybe.
No, please. You can go out there. I'll make it happen. Don't worry. I know a couple people. We'll have more coming up. This is Bloomberg. Let's get some company news right now. Steve Rappaport.
All shares of Novo Nordisk are down more than 1% after the drug maker disclosed that supplies of its blockbuster obesity medicine Wegovy will remain restricted in the U.S. CEO Lars Fergard Jorensen tells Bloomberg he's not concerned about supply issues.
This is a really unique opportunity for Novo Nordisk. We have seen a tremendous willingness to use our obesity medicine, not least in the U.S., but also in Europe, where we have launched. We have this week announced a set of really attractive cardiovascular data, not yet in the label, so we cannot promote them. So this is just going to push the demand even bigger.
The data Jorensen is referring to is from a study that shows use of Wegovy for obese patients reduces the risk of heart attacks and strokes. A tech giant reverses course in the wave of job cuts plaguing the industry. More from Bloomberg's Kimberly Adams.
Steve, it's a boomerang effect over at Meta. The company is looking now to rehire many people it laid off several months ago. Meta shed 25% of its workforce in multiple rounds of cuts that ended in May. Those layoffs are part of CEO Mark Zuckerberg's plan for what he calls a year of efficiency. Meta, formerly known as Facebook, has picked up pace, rehiring dozens of workers in engineering and technical roles. Steve?
Thanks, Kimberly. Shares of Meta are up less than 0.5%. And business travel, it's continuing to soar. The company CWT and the Global Business Travel Association is projecting that prices will climb even higher this year and in 2024. The report says relentless post-pandemic competition for airline seats, hotel rooms, and cars for hire are driving up prices. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Can't catch us live? Your favorite Bloomberg radio shows, including Bloomberg Surveillance, Wall Street Week, and Bloomberg Sound On, are also available as podcasts. Listen today on Apple, Spotify, and anywhere else you get your podcasts.
Your clients all have unique financial journeys. So why should their investment options be one size fits all? When you partner with Commonwealth Financial Network, you gain access to a comprehensive range of holistic investment solutions that you can customize according to your client's goals. Welcome to freedom of flexibility. Welcome to Commonwealth. To learn more, visit commonwealth.com. Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor.
When news breaks across the globe, Bloomberg Radio is there. From Asia
China's economy grew more slowly than expected in the second quarter.
to Europe
NATO has moved forward with plans to enlarge its defence alliance.
and anywhere in the world news happens.
Bloomberg's Anne-Marie on the ground in Lithuania.
Bloomberg's Stephen Engel has the latest from Hong Kong.
Joining us from Bangkok, Bloomberg Chief International Correspondent Hazlanda Ahmed.
Bloomberg's Greg Sullivan begins our global team coverage from Budapest.
Bloomberg Radio, on the ground, everywhere.
If I could be you,
and you could be me, for just 1 hour,
if you could find a way
to get inside each other's mind.
walk a mile in my shoes.
Walk a mile in my shoes.
Walk a mile in my shoes.
We've all felt left out, and for some, that feeling lasts more than a moment. We can change that. Learn how at belongingbeginswithus.org. Brought to you by the Ad Council.
Walk a mile in my shoes. Take a not-so-random walk through hot topics in markets and finance.
The case of the counterfeit commodities collateral.
The end of zero interest rates.
Listen to the Odd Lots podcast with Joe Weisenthal and Tracy Alloway.
How does machine learning actually work?
Odd Lots explores the most interesting topics in finance, markets, and economics.
Feels like that inflation is fading.
Every time we start a podcast saying that, I think we're just jinxing it.
Subscribe today on Apple, Spotify, and everywhere you get your podcasts.
Chainalysis is the premier blockchain data platform. Crypto businesses, financial institutions, and government agencies utilize Chainalysis data and services to make sense of what's happening on the blockchain. As regulators and policymakers work together to pass legislation that provides clarity for crypto businesses and protects consumers, they have the chance to do so with unparalleled data and research into the crypto ecosystem. Demystify cryptocurrency and gain greater visibility and insight by visiting chainalysis.com/radio.
And what you doing with your phone? Taking pictures?
No, I'm asking it questions.
Like what?
Hey, Bobo, do flowers have best friends?
I'm sorry. I'm afraid I don't know that. Hey, follow me. I want to show you something. Look, flowers do have best friends.
Whoa.
Some answers can only be found in nature. Discover the unsearchable. Visit discovertheforest.org to find a trail near you. Brought to you by the United States Forest Service and the Ad Council.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney here in the Bloomberg Interactive Broker Studio looking at these markets. S&P 500 up a third of 1%. Dow Jones Industrials up 0.4%. NASDAQ also up about 0.3%. So giving back the earlier gains that we had after this CPI print, which seemed to come in right in line with expectations, prompting some market folks to say, hey, maybe this will give a little more ammunition to the folks that say, all right, this Fed can stay right where it is, no more rate hikes needed. So we'll keep an eye on that. 10-year Treasury trading at 4.01%. That's essentially unched on the day. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. The U.S. Coast Guard and Navy, 3rd Fleet, plus the Hawaiian National Guard are all mobilized now, helping with those wildfires burning across western Maui. Hawaii Emergency Management spokesman Adam Weintraub tells ABC that the wildfires behaved more like those that you might see in the western U.S., except for one really big difference.
In some of those fires in the western United States, you've got a lot of territory with a long road ahead of you, so when people need to get out, there are ways to do that. We're a small set of islands. There are not a lot of escape routes.
Officials say they don't know how these fires started. Nearly 2,000 acres have burned on Maui and the Big Island. Now that President Biden has issued an executive order limiting U.S. investment in cutting-edge Chinese technology, the UK is hinting that it may do the same. Bloomberg's Ellen Milligan has more now from London.
So about 30 minutes after Biden confirmed he was signing this executive order, the UK government issued its own statement saying that it was going to consider these new measures he's introducing closely.
Bloomberg's Ellen Milligan reports Prime Minister Rishi Sunak's government could mirror the Biden administration's approach and will take about a year to implement. Today begins an official mourning period to honor New Jersey Lieutenant Governor Sheila Oliver.
Oliver's body is lying in state today at the New Jersey State House Rotunda in Trenton. Tomorrow, she will lie in state at the Essex County Historic Courthouse in Newark. Oliver died last week after she was admitted to the hospital with an undisclosed medical issue. On Saturday, the Reverend Al Sharpton will give the eulogy during funeral services at the Cathedral Basilica of the Sacred Heart in Newark. Oliver was the first black woman to hold an elected office in the state. In New York, Michael Barr, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg Matt and Paul.
All right, Amy Morris, thank you so much. We appreciate it. Well, for all the bacon lovers out there, get ready.
Which is everybody, right?
Pretty much.
Everybody loves bacon.
Pretty much. Bacon prices dropped by the most in 8 years last month in the United States, but the relief for many meat eaters is likely to be temporary. That's because money-losing hog farmers are cutting back herds. Top pork producer Smithfield Foods this week said it would close 35 hog farms and lay off 92 workers in Missouri. The problem is that people love bacon, but little else of the hog.
Yeah, well, I mean, I have to say, I do my part by eating a ton of pork products.
Yes.
But I am troubled by the way, especially these big factory operations treat.
You can't go there. Yeah, I know.
Treat the
can't
pigs.
go there. So there is actually, I'm looking at, you got to look at the pork belly market. Pork bellies. Think of Trading Places.
Believe me, dude, I was already there.
USDA boxed pork belly cut, 200-pound spot price. This is in U.S. dollars. $204.58. That's up from just about $60 in the last month. So, I mean, just ripping higher here. So, if you're in the bacon business, you got to follow the pork bellies. Got to follow the pork bellies.
Well, and you got to convince people to eat the rest of the pig, right?
Yeah.
But I am always happy to pay more if I am somehow convinced that the product I'm buying was treated better than the average product.
Yeah. And I don't think you can even have that argument when you're talking about a lot of these things. Yeah. You know, so you just got to, I don't know, you just got to go there. Pork bellies, BLTs, all that kind of good stuff. Keep an eye on the price of bacon. S&P 500 up about 0.4%, holding on to some of the gains we saw earlier on the back of the CPI print this morning. We're going to have more coming up. This is Bloomberg.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to take a look at the endowments of some of these big universities. They're starting to report their returns for the latest fiscal year. Janet Lauren, higher ed reporter with Bloomberg News, will join us in the studio, so that's good. Jeffrey Cleveland, principal and chief economist at Payden & Regal. He's going to join the program, talk about that CPI print we got this morning, what it means for the Fed. And then Ian Whitaker, managing director and owner at Liberty Sky Advisors. He's over in London, one of the smarter voices in the media space that I know. He's going to join us, give us his thoughts on what's happening with Disney and some of these other big media companies as, I guess, we all stream more and spend less time with our traditional networks. What's that all mean for the economics there? But first, first, let's kick things off this hour with Charlie Pell.
Thank you very much, Paul Sweeney. You mentioned Disney. Shares up after earnings now by 3.3%. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index. And yes, the Russell 2000 all in the green. Russell 2000 barely. Little change there, up less than 0.1%. Bottom line here, U.S. stocks trading well off session lows. Traders are betting that even if the Federal Reserve pauses its interest rate increases in September, policy will likely remain tight to prevent a flare-up in inflation. The S&P right now up 16 points on the CPI Thursday, a gain of 0.4%. Dow Industrials up 160, that is a gain of 0.5%. NASDAQ, the composite index, up 0.3%. The NASDAQ 100 index also higher now by 0.3%. 10-year yield 4.01%, with the 2-year yielding 4.76%. Gold up 0.3%, 19.20 the ounce. And West Texas Intermediate crude down 1%, 83.64 for a barrel of WTI. Today's CPI report is bolstering hopes that the Fed can tame inflation without sparking a recession. Diane Swank is chief economist at KPMG, and she was interviewed this morning on Bloomberg Surveillance.
Even though Chair Powell said, he was not optimistic, he wouldn't use that word at the press conference that we could get a soft landing, he also admitted that the path to a soft landing is widening. Now, the Fed has taken recession out of their forecast. We took it out 2 months before they did, so I guess that's good news.
Yeah.
But there's still a sharp slowdown coming, and that's, something we'll have to deal with. But over the summer, things are going to look good until they don't.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Disney again up by 3.4% after management of the world's largest entertainment company said capital spending and outlays for movies and TV shows are coming in lower than projected. Recapping, stocks higher, S&P up 17, up 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate it. Matt Miller and Paul Sweeney here live in the Bloomberg Interactive Broker Studio. We are streaming on that YouTube thing, so go over there and just search Bloomberg Global News, and that'll bring you to the video feed. How fun is that?
Bloomberg Global News.
Bloomberg Global
You've got to put in the phrase Bloomberg Global News.
I did.
I'm just saying, I have searched and searched on YouTube, and I can't find it, but for some reason that's a magical phrase. Bloomberg Global News.
I know.
I don't know why.
It's crazy. I learned that from Carol Masser, because they've been streaming Bloomberg Business Week for a long time, so she taught me well there. So, all right, looking at the markets here, up 0.4% on the S&P 500. Let's see where the action is under the hood. Billy Lipschultz, he covers the markets for Bloomberg News, joins us here in our Bloomberg Interactive Broker Studio. Billy, what are you looking at?
Yeah, still seeing quite a bit of weakness for Tapestry after the deal to acquire. The deal to acquire Capri in an $8.5 billion deal. Tapestry down 13%, worst performer in the S&P 500. The biggest driver to the upside, though, among them is Disney after quarterly results showcasing cost cuts, which will be interesting ahead of News Corp results after the bell today. So getting a bit more detail, Paul, as you mentioned, in your neck of the woods within the media space. One stock that does stand out, though, Yeti Holdings. I don't know if you guys are
huge Yeti fan.
Okay. I'm a big owner of Yeti products. Full disclosure here.
I've got the cooler. I've got a couple of the tumblers. Stock up 21% right now after better than expected second quarter results, boosting their forecast for earnings for the year. So biggest intraday percentage gain since November, trading at the highest since February. Analysts across Wall Street really praising those results.
All right, it is ridiculous how good those products are. I'll put the water in my Yeti little container, go to the beach. I can barely touch the exterior of the bottle because it's so hot from the sun on the beach. Drink the water, ice cold.
But why is Yeti the only name we know?
Because we grew up with
Coleman,
all that stuff.
Or Igloo.
Igloo, that's the one.
Exactly. And I don't know if they make the same kind of products, but there are other cooler makers who make, I think, what's called roto-molded coolers, right? Arctic Coolers is one. Orca is another. I'm pretty sure Pelican makes them as well. But you don't see anything besides Yeti. If you go to an REI, for example, it's all about Yeti.
Well, even if you go to Dick's Sporting Goods or Lowe's and Home Depot, there's an entire Yeti section, wine tumblers, the regular tumblers. mega ones that are like.
My brother's
42 ounces.
fiance has a Yeti martini glass.
You're lying.
No,
she's welcome in the family.
Exactly. It's essential to her lifestyle.
It's a lifestyle aspirational brand.
Well, it's interesting, too. They make backpacks now. They make clothing. It seems like they're really branching out into kind of the mainstream consumer goods outside of just coolers. Because I remember at one point when the stock was trading down back in 2021, it peaked above $107, right now below 50. And we were kind of calling out, like, how many tumblers can a person buy? I mean, my brother's got the backpack. He's got the 12-pack cooler. But, like, other than once you hit kind of...
Now, does your brother also wear a white baseball cap and talk about his frat all the time and have an Old Row subscription?
No, my brother's actually he's in that blue-collar working class, so he's one of the construction guys who has the cooler loaded up for...
You got to have that.
Yeah, they have it too, but I always feel like I risk, if I put a Yeti sticker on my truck or, if I wear the hat, I risk being lumped in with that whole... good old boy crowd.
I don't know.
It's weird.
Aren't you a good old boy?
I don't go to SEC games,
I'd love to go to SEC game.
But I feel like Yeti's interesting because it has that kind of, fraternity vibe, but also the, like, construction, firefighter, police officer.
True.
Kind of
Yeah, look at that chart. That's another pandemic chart. Stock, in 2020 just started ripping, went from like $20 up to $100. And like a lot of those pandemic stocks at the end of 2021 were peaked, kind of been coming down ever since.
Another stock in focus, though, and Matt, I wanted your opinion on luxury, not luxury. Ralph Lauren right now down 2.5%, falling for the fifth straight session after they reported quarterly results that had a light 2Q forecast. Our Phil's call them a luxury brand. Ralph Lauren luxury or not luxury?
I mean, to my mind, it's a staple. To my mind, it's a sort of staple of the upper middle class, right? And they do make higher end products. The Purple Label is one. They have RRL. But they don't actually achieve full luxury, I think. Because, for example, RRL likes flight jackets and, Japanese denim kind of products, workwear sort of stuff. They don't really have the quality that the truly good brands in that space have. They just have the design.
All right, it's $8 billion market cap, up about 18% year to date, and down 2.7% today on that print, right?
Yeah, after those results. Yeah. Right. One of the things that I thought was interesting is that they derive more than half their sales outside of North America. So
really?
Europe
Okay, so
and
that's
Asia making up a big chunk of that.
It'll be interesting to see. I'm going to be really fascinated to see now that China's opening up air travel for or loosening it, I guess, a little bit for its people, whether we'll see an outflow of Chinese just visitors and travel. Do they have the same pent up kind of revenge travel?
What they did? They're allowing group travel.
Yes,
so they're allowing like tour groups now to leave China for destinations like the U.S.
So I guess that's a good first step, but maybe we'll be seeing some more of our Chinese friends here in the big city shopping in some of those big luxury stores. We certainly like to see that. Anything else, Bailey?
Hawaiian Holdings down 4%. This all coming after that news out in Maui. So we're keeping an eye on that. Obviously, not a positive update in terms of kind of the news that's coming out of there, but keeping an eye on
that story is unbelievable. I mean, the fires. I've never remember seeing them, hearing about fires in Hawaii before. So I don't know if this is a new thing, but boy, and just the destruction of that beautiful area. I guess it's on Maui. Crazy story.
The former capital of Hawaii has been decimated.
Yeah, it's just terrible news. All right, Bailey, thanks so much for joining us there. Bailey Lipschultz, he covers all the markets for Bloomberg News. I want to talk about endowments. I know a thing or two about endowments, having worked on some boards of schools, and for a lot of schools, it's the lifeblood. It kind of supports the economics of the school. And some of these big universities report their endowment numbers pretty publicly. And Janet Lauren, higher education finance reporter for Bloomberg News, joins us here in our Bloomberg Interactive Brokers studio. How did some of these big universities do in this last fiscal year, which I guess ends in June 30th?
Yes. So
okay.
we'll be starting to hear more school-specific returns coming up in the next month or two.
Okay.
We get a good snapshot. And the median is 8.7%, which might sound like a terrific return, but we have to keep in mind inflation. So while you have to factor in spending and also what schools are paying out in terms of inflation, they're also paying higher costs for everything from construction to professor salaries. They're even paying more in financial aid.
Yep.
So those, it may sound like a great return, but a lot of it is being eaten up by inflation.
I have to imagine financial aid spending has gone way up over the past couple of decades, because so many, I focus on the schools with the big endowments that you write about, so many of those schools have hardly any students who are paying full tuition.
Well, a lot of the schools have been trying to make a concerted effort, to showing Congress and the federal government that they are attracting lower income students. Harvard said this year 25% of their entire freshman class has an income of $85,000 or below, and they're giving more financial aid for students who are, trying to have a more diverse and economically diverse class.
You like Columbia University, don't you?
Yes, I did go to school there.
Undergrad at Columbia, Master's in Journalism from Columbia, then a Spencer Fellow from Columbia, which you finished this year. What is that?
So that is a reporting fellowship looking into education reporting.
Everyone who comes in here is so much smarter than we are. Everyone from Bloomberg News that comes in, I'm just like, you guys killed me. All right, so going back to your story here, talk to us about endowments. How important are they to these schools? Because it just seems like I do a lot of work with Duke, and their endowment's monstrous, and they get great returns. And it's such a big supporter of everything they try to do. But most schools don't have that.
Right. Well, and there's a handful of schools that are extremely reliant on the returns. Schools like Princeton and Amherst rely on more than half their entire budgets from endowments. I think in some cases they're 60%. But, when you look at smaller schools, their endowments are smaller. They're in U.S. equities, and, they did much better for their returns this year, given that equities were up about 18% in the period. It just depends on the school. And as, long-term returns were about 6% for the 10-year average, which is not a great return considering inflation and what they're spending. They actually have to earn a lot more in order to keep pace. So, we'll see as these numbers come out how the schools are doing. Last year was a terrible year, the worst year in return since the Great Recession.
But, okay, here's my big but here. Alternative investments are, particularly for the larger endowments, are a huge percentage, and it shocks people.
Absolutely.
How much they're putting into hedge funds, private equity, private credit. 30-40% of their endowment they're putting into these things, which don't have... Probably more as some of the bigger ones. They don't have liquidity. That's the downside.
But they make returns.
Okay, there's this thing called mark-to-market.
Mm-hmm.
They did not mark-to-market the down 20-25% year we had last year. I didn't see it anywhere in the endowments. Why?
But why would they have to? It's not the same as a bank.
No, but it's an endowment, and I would think they would have mark-to-market regulations as well.
I don't believe they do.
I don't believe they do.
I can't imagine why they would.
And that's why, and it's interesting, because I kept, when I listening to the board meeting and Duke, I was like, okay, but what about the 40% we got in, some leveraged thing that's in Zimbabwe or something, some, zinc mine? Where's that?
Well, most of the larger schools, you're absolutely right, are mostly in alternatives. And that was a big shift starting in the late 80s, early 90s, when David Swenson, the late CIO at Yale, decided that schools could get a better premium for illiquidity. And most schools, really the big ones, shied away from U.S. equities. And in some years, it's really paid off. In this year and in years past, you've seen smaller endowments with larger shares in U.S. equities have much better returns. And, of course, they're not paying the fees that alternatives command.
Well, tuitions across the board continue to rise, right, Janet? And how long can that happen, especially as it becomes a national issue that people owe so much money in student debt?
Well, I think 20 years ago we would have been surprised at the price tag that it keeps continuing to rise. Now, however, if you look at the share of student loans, the biggest share is not actually for college, it's for graduate school, because you can really borrow a lot, up to the cost of attendance for graduate school, which could be, $80,000, $90,000 in a year. For a federal student loan for your freshman year, you're limited to $5,500, $6,500 in the second year, and $7,500 in the third and fourth year. So the biggest share of student debt is really from graduate school. Yes. Yeah, there's limits.
Okay. You know, Dr. Joel Fleischman had $125,000 of debt.
Did he really?
He paid it off in Alaska.
Which is why he had to go to Alaska. Exactly. He went to Columbia Medical School.
That's right. I remember that show.
The show is called Northern Exposure.
Great show. It's now on Netflix. There's a write-in campaign.
I just bought
it.
I've been searching for it for years.
I know.
And I could never find it.
And who's the guy? Rob Morrow.
Service.
He's a guy. I follow him on Twitter because he does a lot of really good stuff, including he's on Billions now. But I follow him on Twitter, and he said, everywhere I go, people say, how come Northern Exposure is not on Netflix? It's now on Netflix.
And I just bought it. $60 for the whole first season. Well, it's very expensive.
Really? Can you send that password to me?
Yes, that's right. But there's password sharing. All right. Talk to us about, I've got my last of my offspring, my 4 offspring, going to freshman year of college, a private university. The tuition starts with an 8.
Oh, my goodness.
Exactly. I'm just like, holy cow. And there's no end in sight, is there? To me, it's going to take an act of Congress.
I'm sending my kids to school in Europe because it doesn't make any sense to me.
Well, and when we talk about student loans and, you hear this chatter about $10,000, which of course is not happening, it never addressed the root cause, which is the increasing cost of college. So you're right. There doesn't seem to be an end in sight, and there's no real regulation. And when you're looking at default rates for colleges, they're never on the hook. They don't have skin in the game.
Yeah, it's just extraordinary. It doesn't feel like, it's the best university system in the world, arguably, but boy, the economics are tough for the average person out there. Janet Lauren, thank you so much for joining us. Janet Lauren, she's a higher education finance reporter for Bloomberg News, and no diversity in her education. It says Columbia. It's a good school and all, but try something different.
Good.
It's pretty good. Yeah, it's pretty good.
They have a pretty good journalism school as well.
Oh man, I know they're very good. They have a great business school too. I've been hiring people out of the Columbia Business School forever. And a good history department, good to know. I'm sure everything's good there. It's Columbia. S&P 500 up 0.3%. We're going to have more coming up. This is Bloomberg Markets. Let's get some company news right now with Steve Rappaport.
Paul, 2 luxury designers plan to merge in a quest to conquer the competition overseas. Bloomberg's Jeff Bellinger has more.
Steve, Tapestry, the owner of Coach and Kate Spade New York, will acquire Capri Holdings in an $8.5 billion deal. Capri is the parent of Michael Kors, Jimmy Choo, and Versace. Tapestry will pay $57 per share in cash. That's a 65% premium over Capri's closing price yesterday. Capri shares surged nearly 59% ahead of the bell following that announcement. Luxury giants have been snapping up smaller brands recently, and analysts say the wave of consolidation is likely far from finished. Steve?
Thanks, Jeff. Shares of Capri now up more than 56%. Tapestry stock down 13%. Germany-based Allianz says second quarter profit jumped more than 7% from a year earlier, boosted by stronger earnings from its insurance business. CFO Giolo Terzariol says there's opportunity to capitalize on insurance to protect countries from natural disasters.
There are some areas where clearly we need to work together with governments in order to make sure that there is affordability of coverage. So definitely there's an opportunity there, but if we don't work with governments, I think there is also a limit to the opportunity that we can seize.
Terzariol speaking earlier this morning on Bloomberg Television. Mission accomplished for Sir Richard Branson. Virgin Galactic carried its first private tourist to the edge of space. The voyage offered passengers several minutes of weightlessness before returning back to ground. We have shares of Virgin Atlantic now up more than 1%. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Global market news changes in an instant, so don't miss a minute. Listen to Bloomberg Radio anytime, anywhere around the world on the iHeart Radio app. Tune in, the Bloomberg Business app, and Bloomberg.com. The business news Wall Street depends on.
This equity market gripped by headlines.
And the insight that only Bloomberg can provide.
Is this a viable tip? No.
This is a generational report. Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Where do we see the upside from here?
Up to the races at the front end of the yield curve.
These are wow statistics. Listen to Bloomberg Surveillance live weekday mornings at 7 Eastern or on demand on Apple, Spotify, and wherever you get your podcasts.
Bridgebank helps breakthrough ideas actually break through and remains dedicated to providing financial solutions to the risk takers, the game changers, and the disruptors, those committed to making the world a better place. Bridgebank has been providing financial solutions to technology and innovation companies from inception to IPO and beyond for over 2 decades through its national network of banking teams and offices. Bridgebank, a division of Western Alliance Bank, member FDIC. Bridgebank, be bold, venture wisely.
Walking into the building for the first time after the shooting, it was crippling, but it had to be preserved.
In response to the Pulse nightclub shooting that affected the LGBTQ community, Barbara Pona, owner of Pulse, founded the One Pulse Foundation to honor Pulse victims.
Going on in the background, so I have a moment to talk to you guys. Just want to point your attention to a couple things here. Okay, we're going to do a quick walk around the market. Coming down here, we've got a small gap to fill down below on SPOOs. If you follow my cursor on the bottom left-hand side, I believe, on your screen. Bear with me here. I don't have my headphones on. Watching this hourly just curl down right here. Watching this one curl down to curl up. 5 minutes curling down as well. Just watching for that swoop. One of the biggest things that you're looking for here is this lower low back here on yesterday. You're just looking for this nice swoop to come in right here to the upside. I'm going to go through the rest of the market really quick and think tighter for a minute. Let's switch over to something. Give me one quick second. Webull full, it's the full chart right here. So I'm just going to bounce around the market and show you a few things here. HYG. I'll put this on a 15-minute chart. So you can kind of see this gap down below here for HYG to close up. That would also confirm that maybe more dips in store here. See that? Close all this gap up. Still moving to the upside though. So just, don't be looking at any weakness and SPOOs as don't buy the dip, that kind of stuff. That's HYG really quick, just so you can see it. I'm going to show you VIX really quick as well. So if you get that swoop down right in HYG, you'd also see kind of a move higher here, right? And that would show VIX trading up here and up here possibly. That would give that swoop down in HYG and that swoop down in SPOOs. I'm going to show you Dixie next. DXY. So you can see it right here. Dixie also showing that same kind of a move to the upside, right? Down and then up. So you might get a bounce here, but then a roll and then pick up, okay? So that's Dixie showing the same thing. Also an NDX. On a 5-minute chart, I don't know why it's not showing it here, but it's NDLS. Wrong ticker. I fucking hate that Webull doesn't show that. So just down here, you can see this small gap down here that needs to get filled right there. NASDAQ still has a little bit of filling to do down here. I think that's all 4 of them right there. So just on those 4, based on those 4 right there, small gap to fill right here on SPOOs. Just be looking for that weakness down here on NASDAQ. Even if it bounces, still comes down. And so pay attention to this previous low over here. I'm going to move that over. You don't want to see the previous low. Right here. Is that up for you right now? I think that's the low, right? I think that's the lowest point we've had this week. Yeah, that's the low right there. So I'll leave that up for you right now as well. I got to get back to what I'm doing, but I want to check in with you guys because there's some weakness here, and I'm trying to add to a position for next Friday. So Keep your eyes down here if it does come swooping down here. See if I can move some stuff over for you. You can see that supply down there. And leave both of these open right here for you. Put that up right there. A second here. That's all right. Push that out. So I'm adding here at 18 cents right now. I'm going to add it 18 cents. I think I bought 32 or 33. I'm going to add 18 right here, and if I have to add 10, I'll add it right there. But still looking for that 460 into next Friday. Someone just said no bounce. I think you need to scroll out from a 1 minute chart. All right, I'll be right back. I got to get back to a meeting. Hey, so just watch my cursor one more time. I want to show you guys one more time. I'm going to go over here to show you guys something here. I'm watching some of the chat comments that sound like. A second here. So I can get over the trigger screen. So there's the trigger screen right there. I want you guys to watch this here, okay? So just as you're watching me, watch my cursor closely here, okay? Buy the dip. Looking for that next one here to buy the dip, okay? Just right in there. You see it down there? 1, 2, 1, 2. Same thing right here. Coming into it right now. You get some bear drama down here. It's no real big deal. Actually, I just bought that too, so we're looking pretty good. You can see that nice little dip buy right there. Some of you guys like living. Some of you guys are trading like 1 second tickers and stuff, or 1 second time frames or something like that. All right, I'll be back. Yeah, I'm gonna add if I can add 11 or 12 cents or something like that for another pack. I'm gonna try to get in for like 100 contracts all day long. So if there's any more like gifts down here, so if there's any like you don't get the bounce, like I bought this right here, but if they like do some, I didn't catch this one. I was in a meeting, but I was in here trying to get some headphone stuff. It's like if you give me that bounce, I'll take it. You give me that bounce, like capitulation, any kind of nonsense down here. I really don't care. So this is for a weekend plus 7-day trade. So this kind of drama stuff you ever see, especially when you're rolling up, not rolling down, but rolling up, you're gonna see stuff like this, right? There's like an action of dealers. These are people you're selling puts, you're buying calls, and they're not gonna give you the best price. So if I can get in here for like a DCA of like 13 to 15, 18 cents. Something like that into next Friday, we'd be happy. Like 0 to 8 day trading. Anyway, I just saw a couple comments in the chat about like I thought this would hold. You're still looking for this stuff, this velo to be where it should be. See it right here. Look down in the bottom left hand side of your chart. You're still looking for velo to match up. That's where your edge is, right? It's not the HT on its own. But the second issue here, too, is we talk about this a lot inside of our streams, right? You guys should already know here and here. You should already know what you're looking for a reversal to even take a trade, right? So if you box down here and you reject right here, right? You're bouncing around here. You're still looking for that white line to come up and for price to show you the way higher, right? So you're not even entering trades unless you're up here. Does that make sense? So there should be no like, I bought the dip and it started selling on me. If you're doing that, you're taking losing trades probably 9 out of 10 times, even if we do go up there, even if that were to hold. So you guys understand that point behind that? So if you're trying to buy a dip or anything like that, so even where we are right now, right? You've got buyers here, right? What do buyers need right here for you to take along? You might have a trade from here to here, right? But you don't have a trade that's going to pay until you confirm the reversal on that 1 minute, right? You already know that. Like, you don't need me to tell you that, any of that kind of stuff. So it's starting to round out here too. It's bottoming at some point here, so it shouldn't be too much longer. Well, when we'll do it, we have to do a show or a recording or something. I thought I've done a couple of these. I know that I go over this every day in streams, so we'll go over it again. I'll be right back. I got some crazy meetings I got to do today.
You know what's jacked? Banks make you have credit to build credit.
You should switch to Current. It's banking that builds you credit. There are no credit checks. Plus, you get paid up to 2 days faster with direct deposit.
Sounds like a well-oiled machine.
Stop banking old. Get Current, the future of banking. Head to current.com to sign up or download the app. Current is a financial technology company, not a bank. Banking services provided by Choice Bank, member FDIC, and Cross River Bank, member FDIC. For full terms and conditions, visit current.com or call 888-851-1172 for more information.
On its own is going to have an impact on consumer spending or consumer behavior. We're already in the back-to-school season. We're looking ahead, of course, to the holiday season, ever important for retail. And this one indicator isn't enough to say that there's anything drastic that's going to happen to consumer spending between now and the end of the year.
Okay. Why is that?
Well, just, I mean, like the price increases that have been happening, they do, especially in the things that impact their discretionary spending. Those are leveling off, which is great news for everybody. I think what's more important to watch is we have the consumer, the student loan debt repayment starting up. That could potentially show up in things like Halloween spending, for example. That might be an important leading indicator going into the holiday season. If consumers, a very discretionary kind of spend, and it's exactly the kind of spend that is made by the people who are going to be most impacted by that kind of debt repayment. Those are the kinds of things that we're looking at to understand how much there is the impact on consumer spending going into that all-important holiday season.
I have to say, just one anecdotal individual, things are still expensive, and I feel it when I go to the grocery store. I feel like everything in my world just doesn't matter. It's expensive. Super core prices, Molly, I want to come back to that because I saw on the blog this morning, I think it might have been Ira Jersey or somebody else, pointing out, which is super core prices, closely watched by the Fed when it comes to inflation, rose in the 12 months through July in the first acceleration this year. It's service prices is minus energy and housing, right? Which follows a June reading that increased at the slowest pace in 18 months. So it sounds a little erratic, down and then up. So do you disregard it, or how do you see that?
I mean, I think that's kind of the overall story of the inflation as a whole, right? You know, that like we've all known that like the path down to 2% is going to be long and it's going to be bumpy. So I would put this in that same camp, and like the increase in June, that was the smallest in 18 months. Is that what you said?
Yeah.
So that was 4%. This month was 4.1. So kind of like, okay, like not really
splitting hairs.
Yeah. You know, it's kind of like the same with the headline, you know, being up, 3.2 this month. It was up 3% last month. And a lot of that due to the base effects conversation.
But there is something to the effect that as we get closer to that 2%, right, it's tougher in terms of bringing the inflation down?
Yeah, and it's going to be in those those super core services, ex-housing categories that are the most concerning. Those are the ones that are the stickiest price pressures. And, a lot of the disinflation we've had so far has been kind of the unwinding of the pandemic inflation pressures that we had. It's been some easing of the pressures from the war in Ukraine. So it's still debatable of how much the Fed's work has really brought about disinflation. Hey, that's a really good point, and I want to ask Nikki what her thoughts are on or concerns are when it comes to energy prices on the rise again.
Yeah, I mean, again, from a consumer spending perspective, anything that eats up that discretionary budget is going to be the things that really drive whether or not consumers spend. I think, what we've seen up till now is that consumers have been willing to accumulate debt in order to keep and maintain their spending levels. And I think it's a great point. They're spending just as much, but net-wise, they're actually buying less because their purchase power just doesn't go as far with all these sustained high prices. But I think that, that idea of being able to continue to finance some of this consumer spending with some of the debt that consumers have been using before, that's starting to come to an end. Energy prices, and again, the interest rate on that credit card debt, all of that stuff is going to come into play much more in terms of where consumers can go and how they can continue to impact and support the economy.
Following up on that, Nikki, we actually had the CEO of VantageScore in here today. They're a provider of credit scores to millions of Americans. And he was making a lot of similar points that you were just saying. And something that he's actually said on Bloomberg TV before is that the resumption of student loan payments, get this, is going to have a bigger impact on Americans than a Fed rate increase will. So 1 25 basis point increase
has less of an effect on
than the resumption of payments.
I mean, that makes sense because if you think about what the average student loan payment
it's out of your pocket, right?
Right.
Exactly. So if you're not spending that money, you know, if you don't have that money anymore because it's going to student loan payments, then it's not going to goods and services.
Yeah. I mean, Nikki, what do you think about that? You think he's like on it with the terms of the comparison there?
Yeah, I totally agree. I mean, I think that the basis points rates, those increases take a little bit of time before they actually filter down to the consumer, right? It's not like today it was this and the Fed raises it and then the very next day that's impacting the rate that consumers are paying. It takes a little while for that to flow through. But that loan repayment, that's like immediate budget hit. It doesn't matter what the interest rate is. It's a repayment on something that you were able to take off the table in terms of budget before that now you have to put right back in. So if you combine adding that in and then you look at those other factors that can potentially impact consumer spending, like energy prices, like housing prices, the shelter inflation still is making up most of that increase. Those are things that are going to shrink the budget that consumers have for anything else.
Nikki, you work with the retail industry, all different types. A lot of it is about technology, innovation. That's, you know, your background, and you've covered this for a long time. I am curious though what you're hearing from your retail clients right now when it comes to the environment, hiring, consumer trends.
Yeah, labor costs are still really high, and there's been no give back in that regard for frontline workers in any place. So whether the labor market is soft or whether it's, you know, continuing to chug along, you know, the effective hourly rate that a lot of retailers are paying to staff. I mean, I see advertisements in windows in the Denver area for $15, $17, $20 an hour for a part-time frontline retail job. So that part of it is definitely still impacting their business very much so. I would say the other factor that historically was impacting inflation seems to be easing up, which is on the supply chain side. So we're definitely seeing where supply chains have evened out. There might be some weird things like sriracha or that come along and disrupt very specific things. But overall and in general, I would say that the supply chain issues and the shortages that really impact the price rises of 2021 and 2022, those definitely seem to be smoothed out.
Just got about 45 seconds. Quickly, Nikki, are we going to see more of what we see in Zara, where you dump stuff into a bin and it comes up on a monitor and we don't need workers and I'm taking off the security tags?
Uniqlo does it too.
Yeah, Uniqlo has definitely been a forerunner there. You know, it's both of those companies kind of went on their own to kind of drive that innovation, and the rest of the technology industry hasn't completely caught up with that. So I do think that we can get to that point, but I think there's going to be a delay. They custom built their own solutions to do that.
Soon I'm going to be back in the stock room. Real quickly, Molly Smith, just got about 15, 20 seconds. What's your next focal point?
Oh, goodness. I think we've got PPI tomorrow, right? Hopefully.
Is that really a focal point?
I mean, look, it's another inflation point. You know, it's another thing before September, and then I guess Jackson Hole. But the U.S. Open, obviously, way more important.
Wait a minute.
Yeah.
Okay, good.
You can't talk to Molly Smith and not talk about the U.S.
And I
Open.
can tell you already, there's going to be crowds. And if you want to look for a sign of consumer spending at the higher end, it's going to be there.
The tickets are already sold out for some days.
What do we think the Honeydews is going for?
Molly Smith, Nikki Bard, thank you so much. Over at Aptos, this is Bloomberg.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Tape Podcast, a conversation with Mark Douglas, CEO of Mountain.
I think the fundamental issue is Disney, has magical prices for everything they do, meaning the prices are generally pretty high. And I think they're not really delivering magical, experiences or magical content right now. And they keep looking externally for what are the factors that are affecting their business rather than just looking internally. And so even if consumers are spending less money, then deliver the magic and take a bigger share of wallet.
What's the answer on the whole streaming thing? Do streamers really make money, Mark?
Well, I mean, obviously Netflix is definitely making money, and I think you're going to see, because Netflix, their ad-supported tier is, off to somewhat of a slow start, but it's just hugely profitable for them. What they're doing in password sharing, again, is just hugely profitable for them. And my opinion is Netflix is going to kind of enter a new era of just increased earnings. And I think anyone else can get there, but it starts with, people want to be in the parks. People want to watch Star Wars. They want to watch new Disney movies, and they want to do them at the same rates that they have in the past. So I think Disney can absolutely get there. I'm a little concerned that, they're talking about reducing their investment in streaming or moving away from ESPN as if people don't want to watch sports anymore. It's a little bit of just like everything seems to be in turmoil where, I don't think the consumer has actually changed that much. It's Disney's the one that seems to not know exactly the direction they want to go.
Hear the full conversation on the latest edition of the Tape Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. The data and analysis.
How many carbs are in this cheeseburger? I think it's 15 grams for a slice of bread. How many carbs are in these fries? Take a break with the MiniMed 780G insulin pump system. You don't need to be exact with carb counts. Your best guess is good enough. Visit medtronicdiabetes.com/780G system to learn more. System is for people with type 1 diabetes, ages 7 and over. Prescription required. Warning. Do not use SmartGuard feature for people who require less than 8 units or more than 250 units of insulin a day. See bit.ly/780G risks.
That give you an edge.
Bloomberg Intelligence's 10 companies to keep an eye on.
The Bloomberg Intelligence Podcast with Alex Steele and Paul Sweeney.
Economic uncertainty remains a headwind for global bank stocks.
In-depth research on 2,000 companies across 130 industries.
Intel faces tough competition.
We're going to take a look at global life science technology.
Let's turn now to climate change.
Subscribe to Bloomberg Intelligence on Apple, Spotify, the Bloomberg Business app, or wherever you get your podcasts.
Chainalysis is the premier blockchain data platform. Crypto businesses, financial institutions, and government agencies utilize Chainalysis data and services to make sense of what's happening on the blockchain. As regulators and policymakers work together to pass legislation that provides clarity for crypto businesses and protects consumers, they have the chance to do so with unparalleled data and research into the crypto ecosystem. Demystify cryptocurrency and gain greater visibility and insight by visiting chainalysis.com/radio.
Hey guys, it's me, Isabella Gomez, filling in for Smokey Bear because he's got more to say than just...
Only you can prevent wildfires.
Like, if you're outside enjoying a barbecue, don't let a hamburger distract you from fire safety. Make sure you aren't dumping your hot coals or ashes onto the ground because that could start a wildfire. So take wildfire prevention seriously and let's save the world one day at a time. Juntos con Smokey Bear, podemos hacerlo. Go to smokeybear.com to learn more about wildfire prevention.
Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index are all advancing. The Russell 2000 index is lower right now. That index little change, down just 4 points. We've got NASDAQ Composite Index pushing higher by 52 points, up by about 0.4%. The S&P now higher by 14, up 0.3%. And the Dow up 127. That is a gain of 0.4%. 10-year yield at 4.08% with a 2-year that's yielding 4.82%. Spot gold down 26 cents the ounce to $19.14. Little change there. West Texas Intermediate crude down 1.7%, $82.99 a barrel for WTI. Wall Street's risk-on bids started fading after Fed Bank of San Francisco President Mary Daly told Yahoo Finance the central bank, quote, still has more work to do. So why the initial excitement over today's CPI report, specifically the Federal Reserve and the interest rate outlook? Sarah Malik is Chief Investment Officer at Nuveen.
Well, I think today's CPI number does support a pause for the Fed in September, but the door's open for a hike in November. We generally think that inflation is going to have a hard time hitting its 2% target that the Fed has set. So we see structurally higher inflation and interest rates for a while. We also don't see rate cuts in 2024. The market's pricing in about 3 to 4 rate cuts.
And you can hear more of that conversation on the Bloomberg Surveillance Podcast. You can download it wherever you get your podcasts. Tapestry, the owner of brands that include Coach and Kate Spade, has agreed to acquire Michael Kors' parent Capri Holdings in an $8.5 billion deal. Shares of Tapestry, they are down 16.2%, while shares of Capri Holdings, they're surging 55.2%. Again, recapping the S&P up 10, a gain of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And Charlie is always wonderfully setting us up. Charlie Pellet, thank you so much for that. We're going to talk a little bit more about Tapestry. As Charlie mentioned, you know who they are. They own Coach, Kate Spade, used to be Coach, but rebranded a few years ago.
I was going to say, I don't know if everyone knows who they are. I think, like, when this rebranding happened, Carol, I was like, I'm going to have such a hard time keeping Capri and Tapestry straight and, like, what companies they own.
I was going to, I feel like I'm going to age myself, although I was young, or it was my older sister's album, but Carole King and Tapestry. Like, every time I see it, I'm like, Tapestry. That's all I can think of that album. Anyway, yes, Capri Holdings, though, it was created by Michael Kors. It owns Versace, it owns Jimmy Choo, so it definitely is kind of your higher end $8.5 billion deal, as Charlie laid out. And so we are seeing some movement when it comes to luxury goods. I feel like that has certainly been a bright spot when it comes to retail, although, forgive me, Coach and Kate Spade, not inexpensive, but I don't know if I put that in the same category as something like an LVMH.
Ooh. Well, I'm glad you brought them up, because that is the context here, right? Taking on the European rivals. And we got a great group to really talk us through it. Bloomberg News U.S. luxury, retail, and personal care industries reporter Jeanette Newman joins us on the phone from New York City. And our Bloomberg Intelligence team, Deborah Aitken, senior analyst who covers global luxury goods, home, beauty, and personal care. She joins us on the phone from London. Hey, Jeanette, I just want to start with you. Give us the context here, some of the deal terms, but also the context that you and the team wrote about on the consumer team earlier today.
Yeah, thank you so much, and I also love the Tapestry album as well. I will just, I will join you on that. I mean, I think some of the context here is just that Coach went into the pandemic much stronger than Michael Kors, and has come out of the pandemic much stronger than Michael Kors, and we're seeing that in the sense that now Coach's parent company is taking over Michael Kors, and I think some of the reasons for that. I mean, keep in mind, going back a decade, these companies used to be kind of head-to-head competitors, and Coach has really pulled ahead of Michael Kors. It's been able to raise prices, raise its brand cachet. It's done that through some clever designs. It's renovated its stores, whereas Michael Kors has struggled a bit more. It's still very present in some kind of lower end department stores. As you both mentioned, I mean, Michael Kors is more mass market. Coach is not at the level of competing with some of the LVMHs of the world, but it's definitely been able to charge more for its handbags. And both of these companies, together now, I mean, they'll completely dominate the U.S. handbag market here in the U.S.
Well, Deborah, we want to bring you into this, as we mentioned, senior analyst who covers global luxury goods, home, beauty, and personal care for our Bloomberg Intelligence team. She's on the phone in London. Deborah, how do you see this deal? And is it about the Michael Kors brand? Is it about Jimmy Choo? Is it about Versace? Is it all of it? Like, how are you thinking about this?
Hi. So they all have their place, but when we think about Michael Kors, 70% of the business, the purchase price there, it's about really reinventing the Michael Kors brand. Management has been able to do so. I see that the US will be the big market and the fixed market in digital and in wholesale, but also. There's much more to do elsewhere, and I just feel that Michael Kors has lost its way. It really reinvented itself a few years ago, and then I felt it became too saturated in the marketplace, and there's more to do. And I feel that the data composition and the way that digital works and the way that, if we think about the way that Tapestry works, that they depend less on wholesale accounts, which has really felt the pain in the US in the last few months, then that could be beneficial. The other side of it for me is that there's a lot to do with Versace and Jimmy Choo. They're not sizable. Mm-hmm. There was always a comment that Versace could double
and that it should be doing more in Europe too. And it gives a footprint for Tapestry into that luxury market, which is so much more profitable and much faster growth.
Jeanette, I want to bring you back in. I'm looking at Tapestry down about 16%. It's at its pretty much its lows of the day. And Capri, no surprise as being the target here, is just
and at quite a premium, right?
At quite a premium, right, in terms of this deal. I mean, it's up 55%. I'm looking at, it's an $8.5 billion deal, and we're looking at a market cap of $6.3 billion. So, it's just kind of interesting in terms of some of the financials. Tapestry shares, not surprising for it to be down as the acquirer, but it seems like a lot. Is that investors saying you paid too much?
I think part of it is investors questioning how easy it will be for Tapestry to turn around the Michael Kors brand, which has some of the the problems that Deborah laid out, right? I mean, Tapestry is essentially Coach. Coach is the majority of its revenue, and Capri is essentially Michael Kors. That's the bulk of its revenue, something around like 70%. And as Deborah said, it's been a brand that's been struggling. And so to make this deal really work, Tapestry has to turn around Michael Kors. And people would say, okay, well, the executives at Tapestry, they've been able to turn around the Coach brand. Think about the Coach brand a decade ago and think of where it is now. It's really elevated it. But the question is still there, whether they'll be able to turn around the Michael Kors brand. And keep in mind, they turned around Coach. They did an okay job turning around Kate Spade, although that's still a work in progress. They did not turn around Stuart Weitzman, their other brand. That's kind of in the dumps. And now they're taking on 3 more brands. So the question is still there if they'll be able to kind of take this successful Coach playbook and apply it to Michael Kors. Well, they've obviously are juggling a lot of other new companies that they've acquired.
Jeanette, any regulatory risk here?
I think that's a question that's been raised, and we'll have to see. I mean, some of the data that we have from Global Data and analysts at Global Data, these two companies combined will be the 4th largest luxury company in the world, with a market share of around 5.1%. In the Americas, they'll be the 2nd largest player behind LVMH. So that those numbers make people think that's not as much of a concern, but that is still a to be sure.
Deborah, as an analyst who's covering this sector, and I do wonder, how much time do you think investors need to give Tapestry to be able to kind of figure out how they turn around the Kors brand, knowing maybe some of the problems? I have to say, I feel like I see Kors everywhere, and I feel like it's a little saturated. Maybe that's part of the problem.
Yeah. I would say this is a 2 to 3 year fix. I mean, it's not set to complete until calendar 24. So we probably see by maybe end of first quarter 24 that this deal completes through. And from there, we wait 2 years for $200 million of synergies to move through. We end up, I think, with maybe an adjusted EBITDA margin on the back of that. That's probably 150 basis points and gets it to mid-teens operating margin. But versus some of those peers, that still isn't enough. So for me, I think it's a 2 to 3 year process, and I feel that standalone Capri, given where the debt was and how it needed to turn everything, that it maybe is better within this portfolio because of that wholesale adaptation of the model, because of the data capture, because of working more closely with digital. There's a big difference between these. But the other side of it is I actually feel that in the price that this was going to happen. And when we say, stocks are very much today, trail back over a year, and we're looking at a mix of buy and hold on our function, looking at potential price targets. Just about above an ad when we're looking at recommendation.
Right.
But that price target was $70. And I know that we've now over 60% of the market was into the North America, which is cooled down. But it's not for everyone. It's into the biggest.
Yeah. We got to run, and we apologize, Deborah. We know the line was a little rough, and we apologize to our viewers. Deborah Aiken of our Bloomberg Intelligence team, and Jeanette Newman, of course, of Bloomberg News, who both of them, of course, following this space.
Let's get a check on the latest world and national news. Nancy Lyons is in Washington, D.C. Hey, Nancy.
Thanks, Tim. Federal emergency help is heading to Hawaii, where wildfires fanned by heavy winds have destroyed the historic town of Lahaina on Maui.
President Biden declared a major disaster in Hawaii.
Anyone who's lost a loved one whose home has been damaged or destroyed is going to get help immediately. We're working as quickly as possible to fight these fires and evacuate residents and tourists. I'm going to make sure the state has everything it needs from the federal government to recover.
The president was in Salt Lake City speaking to veterans who received government benefits after their exposure to toxic waste in Iraq and Afghanistan under a law passed a year ago. In Washington, Irv Chapman, Bloomberg Radio.
We're hearing that President Biden intends to submit a supplemental funding request of at least $25 billion to Congress. Bloomberg White House congressional reporter Jordan Fabian said, actually he's a White House reporter, says the money would cover additional disaster relief and provide more money for Ukraine.
This is an emergency spending package that would be outside the spending caps that were set in that deal that President Biden and Speaker McCarthy reached in May to avoid a debt default.
Bloomberg White House reporter Jordan Fabian says Republican leaders are expected to push back. The Justice Department wants a January 2nd court date to begin the trial on charges former President Trump criminally conspired to obstruct the 2020 election. The Trump legal team now has until August 17th to weigh in on when it wants the trial to begin. Then Judge Tanya Chutkan, the U.S. District Judge overseeing the case, will announce an official trial date in an August 28th hearing. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
This is the story of...
Want to make your night out a little more fun? Try some music, some friends, and a few rounds of Club Keno.
I won!
But how can the Michigan Lottery make Club Keno more fun?
Tripler time!
That's right, Tripler Time's back. All this month, random Club Keno tickets will have a doubler or tripler message. Find one, and your Club Keno and extra prizes will be doubled or tripled. So triple your fun.
Yeah!
With Club Keno Tripler Time, only from the Michigan Lottery. Knowing your limits is always the best bet.
A very special woman. Just a few knew about her superpowers. In a matter of seconds, she turned herself into a great mathematician. She masqueraded as a regular person at work, but as a superhero at home. Everyone knows her as Gabriella. I still call her Mom.
Your hero needs you now, and AARP is here to help. Find the care guides you need to help, complete with tips and resources at aarp.org/caregiving. Brought to you by AARP and the Ad Council.
When news breaks across the globe, Bloomberg Radio is there. From Asia,
China's economy grew more slowly than expected in the second quarter.
To Europe.
NATO has moved forward with plans to enlarge its defense alliance.
And anywhere in the world, news happens.
Bloomberg's Anne-Marie on the ground in Lithuania.
Bloomberg's Stephen Engel has the latest from Hong Kong.
Joining us from Bangkok, Bloomberg Chief International Correspondent Hajlinda Ahmed.
Bloomberg's Greg Sullivan begins our global team coverage from Budapest.
Bloomberg Radio, on the ground, everywhere.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the Lingo.
GOAT, G-O-A-T, acronym, stands for Greatest of All Time. As in, spaghetti sandwiches for dinner? They're my fave. Dad, you're the GOAT.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Breaking political news from the team that knows D.C.
A breaking story, Greg Storer, Bloomberg Supreme Court reporter with us.
Bloomberg Washington correspondent Joe Matthew, along with D.C.'s most respected news team.
Jack Fitzpatrick on Capitol Hill. Brian Seekbeck with Bloomberg national political reporter. Nick Wadhams, the head of Bloomberg's national security team.
Bloomberg Sound On with Joe Matthew.
More breaking news today from the Supreme Court.
Listen live weekday afternoons at 1 Eastern or on demand wherever you get your podcasts.
Bridgebank helps breakthrough ideas actually break through and remains dedicated to providing financial solutions to the risk takers, the game changers, and the disruptors, those committed to making the world a better place. Bridgebank has been providing financial solutions to technology and innovation companies from inception to IPO and beyond for over 2 decades through its national network of banking teams and offices. Bridgebank, a division of Western Alliance Bank, member FDIC. Bridgebank, be bold, venture wisely.
Not completing high school is more of a social thing than it was an academic thing.
Even though all these years have passed, I still had that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
The Bloomberg Business of Sports podcast, where the money is flowing inside sports around the globe.
To drop some knowledge on the sports agency business.
The latest on the PGA Live Golf Tour.
Who is the next U.S. emerging rugby star?
Michael Barr, Scarlett Fu, and Damian Sessauer take you inside the decisions that power this multi-billion-dollar industry.
The balance of power in F1 might be shifting.
Bloomberg Business of Sports. Subscribe today on Apple, Spotify, and everywhere you get your podcasts.
At PPAC Private, we know that dreams can lead to great achievements. And that path, from dream to reality, takes planning, hard work, and determination. Our wealth managers understand our commitment to client success. We're dedicated to providing the guidance that helps them achieve it, generation after generation. While others dream, PPAC clients achieve. For advice in planning, investment management, and trust and fiduciary solutions, visit ppacprivate.com. Not FDIC insured, no bank guarantee, may lose value.
Hi, I'm Danica Patrick. Watching my nieces grow, play, and learn is amazing, but not every child gets to be carefree. 1 in 6 kids in the U.S. are hungry. This breaks my heart, and it's something that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste and gives it to families in need. To help, visit feedingamerica.org.
Brought to you by Feeding America and the Ad Council.
Whether you're an in-house counsel or in private practice, Bloomberg Law gives you the edge with the latest in AI-powered legal analytics, business insights, and workflow tools. With guidance from our experts, you'll grasp the latest trends in the legal industry, helping you achieve better results for the practice of law, the business of law, the future of law. The difference is Bloomberg Law. Learn more at BloombergLaw.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long. We've got the Dow higher, NASDAQ as well. The S&P is fluctuating, so let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
Good afternoon, Charlie. As you said, stocks are mostly in the green, but well off the day's highs after U.S. inflation data. The Dow is up 45 points, S&P holding on to a slight gain, with the NASDAQ rising 20 points. The U.S. 10-year yield is at 4.09%, and small caps are down 5. 8 of the 11 main S&P sectors are trading higher, led by gains in communications and financials, while NASDAQ biotechs are up 15 points. Transports gained 70, semis slipped 10 points, while the VIX is little changed. Leaders in the Dow, Disney, Amgen, and Verizon, while Nike, Goldman, and Procter & Gamble are the worst performers. After earnings, Alibaba rose 4.5% as first quarter results topped expectations, yet he jumped the most since November after a profit beat and guidance boost, while Disney gained after cutting costs and boosting prices for its streaming service. In deal news, Coach-owner Tapestry is buying Michael Kors' parent Capri for $8.5 billion. Tapestry fell 16% to a 9-month low. And in other news, GM and Ford are among the market's biggest losers amid worries about labor costs. Look for earnings from News Corp after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie.
Okay, we thank you very much, Bailey Lipschultz. And to hear live breaking news over your Bloomberg, type SQUAWK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
Yeah, how about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 17 and a half minutes left in today's trading session. Carol Massar along with Tim Stanovic live in our Bloomberg Interactive Brokers studio on YouTube and Bloomberg Originals. And I think Romain said it really well in terms of the bouncing around that we are seeing. Certainly on the equity trade, I feel like that's been going on throughout the week, Tim. But you got yields. They're kind of high.
It's kind of wild today, Carol.
Higher,
you look at the NASDAQ, for example, and it was up as much as 0.7%.
Mm-hmm.
Yeah, earlier today.
Yeah.
Down. Now down.
Yeah, down, right? Yeah, kind of flat.
I know.
I think we're going to live from data point to data point, and we're also going to wait until kind of the next Fed meeting. I feel like that's going to be our life for a little bit. But let's see what Aaron Kennan says. He's much smarter than me, that's for sure, and is in it. He is, of course, co-founder and CEO at Clear Harbor Asset Management. They've got about $1 billion in assets under management. Joining us once again on Zoom from Stamford, Connecticut. Hey, Aaron, good to have you back with us. It is an interesting market, but let's have Tim always reminds me, got to take a longer view, step out a little bit in the perspective. We've had quite a run, certainly, when it comes to some of those big tech names in the NASDAQ overall and also the S&P. So a little bit of churn maybe is to be expected.
Absolutely. Yeah. Thanks for having me back, Tim, Carol. We've gone a long way year to date, and what a change from 2022 for sure. But, if you look at just this earnings season that we're still sort of wading through, but we're more on the tail end of it. I think the reality is that many companies most of the companies have beaten expectations, but when you look at year over year earnings growth, not much has changed. And so those expectations have been exceeded, which is something that we all welcome. But markets haven't reacted, dramatically as a whole to the earnings cycle. And I think, the market's trying to figure out whether or not a PE multiple for the S&P 500 at 20 times anticipated 2023 full year earnings is the right multiple given the current environment.
Do you think it's the right multiple?
Well, it's interesting. I think the bond market is signaling two different responses to that. And I always sort of, peer into the bond market to try to help me answer that question, Tim. The inversion of the yield curve suggests that a recession is, in fact, around the corner, whether it's the back half of this year or perhaps the front half of next year. But nominal rates are actually higher on a year-to-date basis, which is sort of a little bit of a conundrum for those who are trying to extract tea leaves from what the bond market is telling us right now. We think, when you look at the trajectory of inflation, we saw CPI this morning. And, a year and 1 month ago, we're at 9% headline, and now we're at 3.2%. So we've come a long way. And the Fed, if you look at Fed funds futures, looks like it's on hold. I think there's only like a 10% chance of a move in September. And so, it's just sort of interesting, particularly with the significant, I think the most significant short interest in the Treasury market that we've seen in my lifetime. Where we are right now, where the bond market's sort of signaling that maybe we're not all clear on inflation, maybe growth remains stronger than expected, and the equity market is a little more sanguine on that point.
So, PE multiple, how reliable? How much do you use it as kind of an indicator, a reliable indicator of where we go from here?
It's not first of all, you have to look at which components of the equity market we're looking at when we talk about PE multiples, because it's where we come from in PEs, where we may be going, what's the historical basis for PEs. If you think we're going into a deep recession, PE multiples for the S&P 500 tend to bottom at 14 times, 15 times. So, that's an anchoring point. If you believe in hard landing, the market's certainly not pricing that in. You also have to think about PE multiples within sectors. You look at Europe, you look at, a heavily industrial banking focused part of the equity market. Well, naturally, PE multiples, because it's a lower growth segment of the market and the economy, are going to be lower. So it's not healthy for one to sort of look through the S&P at 20 times and compare it to the European market that has far less technology and therefore growth exposure.
Okay, so I ask you this question all the time, Aaron. Someone comes to you with money. How do you deploy it right now?
Well, oftentimes people come to us with capital that's invested. We're very cognizant of tax implications. I would just say this, based on where we think inflation is moving, we are incrementally more bullish on taking a bit more duration risk in fixed income here. In other words, extending out into fixed income, owning high-grade fixed income. That means to us treasuries, mortgage-backed securities, and maybe even some investment-grade credit exposure. On the equity side, we still believe in diversification. We think there are opportunities across multiple sectors. We're just not, given the current valuation in the market, we're not poised to sort of increase our targets here. But we do believe in equities for the long haul. And that's a philosophy that we've always embraced here at Clear Harbor.
Hey, on the treasuries or the fixed income side, what kind of duration? You said you're willing to go out a little bit. How far out?
Yeah. Well, if you look at the Bloomberg Aggregate Bond Index, which is the primary benchmark of the fixed income market, it has an average weighted maturity of about 8.5 years, maybe a little more than that. And of course, it seems like Mr. Market in fixed income is hugging the front end of the market right now because Treasury bills are well over 5%. And the yield to maturity of the Bloomberg Aggregate is only about 4.9%. But if you think the Fed is sort of done or about done, we think this is a good time to at least nudge your average maturity and duration further out the curve. So it depends on the client, depends on what the objectives are, but just moving it out. If your average maturity is now 1 year, maybe you can move it out to 2 or 3. If you can move it out to 8.5 and you're at 2 now, maybe you move it out to 4 or 5. It's making those sort of incremental shifts right now, given the sort of risk reward that we see in the market.
Right, which maybe explains too where I think, was it the 30-year today? The Treasury auction didn't go as well as I think some of the auctions earlier in the week, maybe some of that longer duration. Aaron, thank you so much. We got to run. Be well. Aaron Kennan, co-founder, CEO at Clear Harbor Asset Management, over $1 billion in assets under management, joining us on Zoom from Stamford, Connecticut. You look like you're thinking about something.
Yeah. I was looking at the wrong column. The Nasdaq was higher by 1.6% earlier today. I remember it was surging this morning. We're recording our weekend show.
Yeah.
I said, look at the markets.
We popped. We
popped, and now we're
The easy inflation print, I think, made everybody. I know.
Then what happens?
Higher for longer.
Oh, that's new news.
I told you. Did you get the memo?
I got the memo.
All right, guys, stick around. More to come, certainly here on Bloomberg Business Week. Carol Masser, along with Tim Stanovic, and this is Bloomberg Radio.
If you're having a business dispute, the process can be slow and drawn out, especially if you rely on litigation in the courts. You can wait for years before your case is resolved, and the longer your case proceeds, the more your case can cost. Not with the American Arbitration Association. Arbitration or mediation with the American Arbitration Association is faster. In fact, nearly 50% of our cases settle prior to hearings. ADR.org. Resolve faster.
From New York, another update on Wall Street. In fact, records to London.
UK businesses are feeling the effects of higher prices.
To Hong Kong. The Hang Seng down about 1.3% right now.
24/7 business and market news that expands your worldview.
Bruno Le Maire, always nice to see you, French finance minister.
I'm much more concerned about how things flow out of China.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Wake up and text. Text and eat. Text and meet up with a friend you haven't seen in forever.
Hi.
Oh, hey. Text and complain that they're on their phone the whole time. Text and listen to them complain that you're on your phone the whole time. Text and whatever. But when you get behind the wheel, give your phone to a passenger. Put it in the glove box. Just don't text and drive. Visit StopTextsStopWrecks.org. A message from NHTSA and the Ad Council.
Get the news you need to start your day in just 15 minutes.
We have more news on the latest indictment of former President Donald Trump.
The Fed taking rates to the highest level in 22 years.
Wake up with Bloomberg Daybreak, U.S. edition.
Ukraine is intensifying its drone strikes.
Preseason football, the Hall of Fame game in Canton, Ohio.
Available now on your podcast feed. Each weekday morning at 6 a.m. Eastern.
Tensions between the U.S. and China remain in focus.
Subscribe to Bloomberg Daybreak, U.S. edition, today on Apple, Spotify, and everywhere you get your podcasts.
No one knows where this market will go. Right now, it feels like a wild ride. But one thing's for certain, there's a way through it. And the experience and guidance of a Merrill advisor can help you get there. Because where there's a bull, there's a way. Find an advisor at ml.com/bullish.
Merrill, a Bank of America company. What would you like the power to do?
Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor. Member SIPC, a wholly owned subsidiary of Bank of America Corp.
Your business landscape is ever-changing.
There could be a lot more selling to come.
Ours is too.
Just getting some headlines I want to bring to our audience.
We also have the unknown of how much can financial assets take.
We have something else in common.
Small caps continuing to feel the pressure.
We seek out the latest business news wherever we are.
A deep drop in Asian equities overnight.
U.S. futures also pointing to the downside.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. Global market news changes in an instant, so don't miss a minute. Listen to Bloomberg Radio anytime, anywhere around the world on the iHeartRadio app. Tune in, the Bloomberg Business app, and Bloomberg.com. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The U.S. Supreme Court has agreed to consider scuttling Purdue Pharma's $6 billion opioid settlement, taking up a Biden administration appeal that contends the accord improperly shields the Sackler family members who own the company. News Corp will be among the companies reporting earnings today after the close of trading. The media company's forecast to face declining revenue in all of its segments from a year earlier, dragged down by macroeconomic uncertainty. Virgin Galactic Holdings carried its first private tourist to the edge of space today, a long-awaited milestone in founder Richard Branson's quest to build a space line from Earth. Geetha Raghunathan follows media companies for Bloomberg Intelligence, and she was asked about the Walt Disney Company's report following its report last night and a 4% surge in the stock today.
Disney is betting that not many people are going to cancel at all, so that they already did a price increase just at the end of last year. They said that the results of that were actually very, very encouraging to them. And remember, the whole streaming narrative has really changed. Initially, when all of these companies made that pivot, it was really a volume story. Now it's a pricing story, right? It's all about ARPU growth. It's all about increasing that top line. We're seeing kind of Netflix do that. We saw Paramount Plus kind of raising their prices. Now Disney is doing it.
ARPU, shorthand for revenue per user. Hear more of the conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Gotta love a co-host and say, hey, what are we doing now? And he's like, whatever we want.
Well, we're the bosses, right? That's what I was told. Is that right, guys? I'm looking in the control room and I say, we're the bosses.
Who do they think?
Nobody's saying anything to me. They're just ignoring me.
We can shut off your mics.
They can't. That is true. We are not the bosses. Let's do this happy hour story.
Yeah, let's do that one. I love this one. I think Charlie Pellet might have shared this with us.
I don't know.
I don't know.
I didn't get it from Charlie today. Charlie, you got to add me to your email list.
I like happy hours. What can I tell you? I like people, I like bars, and I like happy hours.
Join the crowd, kiddo. All right, so this story on the Bloomberg Wall Street weekday happy hours boom as bankers stay home Friday. So hybrid schedules have rendered Friday happy hours obsolete, leading restaurants and bars to adjust their marketing strategies accordingly. So hello, Wednesday and Thursday. I was out for dinner before a movie last night, dinner and a movie.
Nice.
And
it's a weeknight, though, Carol.
I know. It was a school night, and it was pretty much, it was hopping.
But
the place we went.
But you kind of don't fit into this because you're not a remote worker. But
you're right. I'm not a remote worker. It's true, though.
But you probably were around a lot of remote workers.
Yeah.
I bet Thursdays are pretty big because a lot of people don't work on Fridays. So Rise in Remote Work has made the ritual of the Friday happy hour a tough sell in financial districts from New York to London, forcing bars and restaurants to rethink their strategies for courting the cubicle crowd. Well, I like that. The fizzle of Fridays has owners and managers doing everything from hiring midweek DJs to changing their drink specials to staffing up behind the bar for shifts that are earlier in the week. A lot of places have happy hours that are like, weekdays, right?
Yeah.
Like, because they have trouble getting people into the bars. It's just like the habits have completely shifted in recent years. It's similar to the conversation that you and I had a lot during the pandemic, which was, the commerce centers of places have shifted. It's no longer Midtown, right? It's the different neighborhoods around New York City where people live and are going to lunch in places in Brooklyn that they would only, frequent on a weekend. If they weren't working from home.
Yeah, exactly. I mean, it's really interesting, some of the changes that they are doing, right? Like you said, DJs at different days or different hours, and people are just adjusting. So I think about it too, going to, a local shoemaker like here. Like during the pandemic, people weren't coming in, and even after with all the remote working, like they got hit hard. I mean, it's really hard. All right, anyway, adjust your happy hours, folks, because it's 5 o'clock somewhere, or it's 4 o'clock somewhere, or it's 3 o'clock somewhere, apparently. All right, watching the markets, equities just off their lows of this session. We're going to talk about the trade. We'll wrap up the trading day. Head over to our TV colleagues. That's because Beyond the Bell, it starts right now.
Broadcasting 24 hours a day at Bloomberg.com and the Bloomberg Business app. This is Bloomberg Radio. Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Tim Stenovic and Carol Massar. Welcome to our audiences across all of our Bloomberg platforms. Carol, you look vexed. What are you looking at?
I don't know. I'm just kind of looking for something to talk about because...
Wow. I appreciate the honesty, Carol. I like that.
Carol Massar.
It's like, once again, right, we have this day where...
these 2-day work weeks are tough, right?
It's a little tough getting back in the groove. No, but I think it's just an interesting trade where we did see a rally. It really kind of fizzled. You do see rates kind of holding on to some of their highs of the session. I just think, we got to just kind of wait to see what we get in terms of the Fed's next move and direction and kind of guidance, if you will. And that's a long way, a month away or so.
It is, and a lot can happen between now and a month. We have, another employment report that we hear about. We have more inflation reports, but I'm still obsessed with today's trade and the way that the S&P 500 was up as much as 1.3% earlier in the session. The Nasdaq was up more than 1.6 earlier in the session, and we're looking at a day that's going to close pretty much, fractionally higher, perhaps, or even lower if it moves lower in the next few minutes.
I like what our last guest just said, which is that people that she talks to, her clients, no one's obsessed with recession anymore. I mean, Romaine, you, Carol, and I are, but their clients are no longer obsessed with that. It's more about looking ahead and making sure that they, catch up to the gains that they might have missed out on.
Yeah, I mean, and, look, you get to a point, too, where we should point out that there are some seasonality effects going on right now, particularly when it comes to volume. In the middle of August, where a lot of folks, of course, are away from their desk, and you don't have as many catalysts. I mean, earnings season is wrapping up, and as we pointed out, it's still a ways away until we get that next Fed decision. So you hang your hat on the economic data that we got this morning. There's certainly some positives in there, and maybe that was a catalyst for the rally.